The digital world is ever-changing. With more than 20 years of experience in serving the investing public and the financial services industry, Cybercode has been providing financial training and information technology solutions for established clients. Cybercode is based in Singapore with 7 offices around the globe and continually expanding. Being ISO 27001 certified and having a proven reputation for service excellence, Cybercode endeavors to build long-term relationships with customers and business partners alike. Our services include, but not limited to, the following: investing public, to provide training programs to the public, such as investment and stock trading courses. Financial professionals, providing up-to-date training courses for the finance professionals, keeping them well informed with compliance, regulatory requirements, financial products, and best practices. Financial technology. We develop and provide information technology solutions and management services, curated specifically for our clients' needs. Cybersecurity and data. We provide data, information, analytics, and cybersecurity services to your business, keeping your data safe. Since our inception, we have trained thousands of participants among the investing public, financial professionals, hundreds of B2B clients, and have continued to forge strong business partners. To find out more about what we do and how we can help you, contact us today. Cybercode is a leading financial training provider and a leading developer of information technology solutions and management services.
The STI declined 3.5%, with dividend distributions marginally reducing the decline in total return to 3.4%. The 506 million Singapore dollar net institutional outflow from local stocks at the start of this month was driven by financials and industrials, which respectively booked 476 million Singapore dollars and 66 million Singapore dollars of net institutional outflow. ASEAN's most defensive performing sectors included healthcare, telecommunications, consumer non-cyclicals, energy, and utilities. The 4-session trading week resulted in net institutional inflow for Singapore Telecommunications, StarHub, and Netlink NBN Trust, which led combined net inflow for the sector to 48.38 million Singapore dollars. Meanwhile, Singapore's utilities sector booked 7.1 million Singapore dollars of net institutional inflow over the 4-session week, taking the sector's combined net institutional inflow over the first 6 sessions of August to 8.7 million Singapore dollars. On August 6, Sembcorp Industries reported 1HFY24 net profit before exceptional items of 532 million Singapore dollars. Scan or click the link in the description to learn more about these stocks or join SGX Invest on Telegram for the latest news update. Please note this is a general commentary of historical performance and not necessarily indicative of future performance. Check out our investment courses that are up to 70% subsidized at cyberquote.com/sg or contact us at support@cyberquote.com.sg.
The Institute of Banking and Finance, or IBF, was established to foster and develop the professional competencies of the financial sector. IBF is dedicated to empowering practitioners with capabilities to support the growth of the Asian financial industry. It is the national accreditation and certification agency for financial sector competency. Developed by the industry for the industry, IBF Standards is a set of competency standards benchmarked to international best practices. IBF's vision is to be the Asian standard of excellence for practitioners in finance. IBF Standards covers 13 industry segments and offers a wide range of development roadmaps. IBF Standards offers accredited programs to guide a financial practitioner from licensing examinations to professional certification. IBF Standards certifies financial practitioners at 3 levels. An IBF qualified individual is one who is equipped with a broad base of capabilities and foundational competencies to undertake new roles. An IBF advanced individual is one who has acquired applied knowledge and complex analytical skills for specialists or leadership functions. An IBF Fellow is an industry veteran who has demonstrated professional mastery and exemplifies thought leadership and commitment to industry. The IBF certification mark, a set of parallel elevation bars, symbolizes the close partnership between IBF and the industry. IBF certification is therefore an industry-endorsed mark of quality that recognizes individuals who exhibit professional excellence, integrity, and commitment to the industry. Be part of the IBF community of certified financial practitioners. Participate in continuing professional development programs. Avail yourself to learning resources to plan your career. There are also opportunities for mentoring and networking. IBF, the Asian Standard of Excellence for Practitioners in Finance.
Hi, a very good evening, ladies and gentlemen. Thank you for tuning in for this Thursday webinar session of the webinar titled Fighting the True Leaders Amidst the Geo-Economical Uncertainty and the Distress by our keynote speaker, CKE, the founder, the co-founder, also the founder of the Asia Chart, as well as IBF accredited trainer for teaching one of the course mastering explosive swing course. Now, also associate trainer with CyberCode. Now, do allow me to do a short introduction of the keynote speaker. And of course, thank you very much for those for joining in for this evening webinar session, right? My name is Andy. I'm the host for today's session. Now, of course, throughout this 2-hour session, please feel free to post your question into the chat or Q&A. You do have any question pertaining to today's topic, right? So in the appropriate time, CK as well as myself, let's say you're facing any difficulty in this, say, posting the message, you can actually post it into the chat, so we are able to reply you from there as well. Now, of course, talk about a little bit of keynote speaker today, CK. Now, in this CK, basically, he is a trader just like you and me. He has been start trading easily more than 30 years back. So in the heydays that he been organizing more than 500 over physical face-to-face webinar or session, not webinar, seminar, right? In those places like Suntec or Expo, you know, which is actually to share about his market insight. Now, he is also very few individual in Singapore locally has been invited by the Caucasian company to provide his market insight. And he is also one of the person who are using one of the software called Metastock. If you do know about that, he's been using it very extensively as well, right? Now, indeed, today, this 2-hour session, apart from we are talking about to finding the true leaders amidst the geo-economical uncertainty, distress, and also toward the end of the session, CK also going to share with you one of the course. This is all fall under the IBF accreditation course, which actually can benefit all of you here. So please stay tuned to the end of the session. Myself and CK definitely going to share with you how can you benefit from this IBF accreditation courses, right? So I will officially pass the mic over to CK to take over the session from here, right? CK, over to you, please.
Thank you, Andy, and welcome everybody to this evening webinar. Now, obviously, by now, you know, we have a lot of issues. Though I think interest rate has been cut, which is a good thing. I will explain to you why it's important. But we do have a lot of geopolitical tension, and there is still a lot of rivalries between US and China. And we still has the uncertainty surrounding the US elections. So all this uncertainty actually cause people to be very jittery. Now, as what Andy has mentioned earlier, I've been through the markets boom and bust for a few decades. And I realized one thing, at the end of the day, a lot of things you don't really have to go and study. Key thing is need to understand the basic fundamentals, the core principle of good investing. And once you realize this, you'll find that actually market somehow work out by itself. Whether it's a bull market or bear market, it really doesn't matter. So in today's context, especially with the advance in technology, with social media, information spread very fast. And that is the downside. When it spread very fast, meaning that actually bad news spread very fast and people tend to overreact. And you can see that in the recent sell down in Nikkei 225. So the way they sell down is really tremendous, and a lot of people got freaked out by the actions. So finally it recovered, but there are a lot of jittery and a lot of volatility. So all these are really not necessary, and I'll try my best to explain to you in today's session. And true leader will just stand out, regardless the market condition. Huh? Now, before I go further, just a brief intro about myself. Who am I exactly? Like what Andy mentioned, I'm a private trader. So I'm not a reminder, you don't trade with me. I'm not a fund manager. I don't collect money from you. I'm not a prop trader. I still got to pay commission when I trade. So I'm just like yourself, a private trader. Now, I became serious students of the market only in 1998. Prior to that, just like many people who started out, I was just dabbling the market. I leave everything to my wife because she happens to be working in the bank and she have access to information. So in the 90s, there's no internet. So informations are filtered. Not like now. Now information are not filtered. So informations are filtered. So generally you have quality information. And I thought we should be okay because she worked in a bank and she have access to all the expert. But in Asia financial crisis 97, she actually lost a lot of money. So just thinking, how can that be when you actually have all the advice from the expert? Then you told me the expert also lost a lot of money. So in 98, I decided to actually study the market myself, read as much as I can. I eat, sleep, and go to washroom with a book on investment. Everywhere I go, I carry a book to read. I discovered something, and hopefully you can register that because this is something which a lot of people are not aware. Being normal cannot make money. Are you okay with this? If you behave normally, you are contributing to the market. Market never based on logic alone. So being normal cannot make money. So that is the reason why similarly very intelligent people cannot make it in the market. Okay. So I regret I didn't start earlier because I did not take advantage of the dot-com bubble. If you know how to trade, dot-com was the best time to be in the market. So I miss it. I began to make money consistently only when the bubble burst by shorting the market. It was also coincidental because at that time, SJ introduced a product called SBL, script borrowing lending. So we can borrow the script and short the market and hold it for as long as you want. So I began to actually make money consistently by shorting, which kind of unusual because most people actually make money first by going long. I first make money by going short. In 2003, baby boom market started and it was very easy. Now in 2006, I met two like-minded individuals and we decided to start this company called Asia Charts to try to fill the gap in the industry in terms of quality education. So I find that there is lack of this quality education in the market. So we decided to actually fill the gap. Together with my associate, we trained more than 10,000 students in Singapore, Malaysia, Indonesia, and Vietnam. Now, this is not to impress you, to be impressed upon you that I've been around for quite some. This is the first time I got featured in Straits Times, August 2008. And we set this philosophy a long time ago. First thing first, we don't offer get rich quick scheme. We live our principle in teaching what real trading is all about. So actually, whatever I share with you are just real trading is all about and nothing fancy because ultimately, end of the day, trading itself is a skill set. Now, I got featured again in 2009 and I said the same thing. People looking for get rich quick scheme must not do the trading. Mindset can be very dangerous. So I tell people upfront. A lot of people has interviewed me. I always say the same thing because most people cannot make it because they do not think that it is a skill set. Trading is really a skill set and you can learn one. Okay, don't take it as a casino. No, a lot of people actually lose money. It's because they take it as a casino. All right. So this is something very important. Now, once you actually understand this, put in the effort. The whole idea here is to help you to cut short the learning curve and you actually get onto it. All right. And be profitable trader yourself, profitable investor. So remember, trading is a skill set. All right. And you need to commit some time. Now, subsequently, I got featured in Business Time, regional newspaper like Morning Posting, joined in Dongfang. Company and myself was actually featured in Channel News Asia. All right. There was a program that lasted 35 minutes and we are actually featured and it was telecast 5 times. I was invited by Thomson Reuters to be the keynote speaker for the event. In fact, I was the very first Asia Pacific speaker for the event. All right. And subsequently, I was invited by Bloomberg, which was most unusual because I do not know people in Bloomberg. I know people in Thomson Reuters, but I do not know people in Bloomberg. And they asked me to analyze the Shanghai market. All right. It's most unusual because I received the email from them out of the blue and I did that for them for a couple of months. I was also invited by Macquarie Research to do Outlook Market event for them. Now, these are big institutions. They have a lot of experts, but they still want my opinion, want my inputs. And I'm extremely flattered by the invitations. So this is just a rough background about myself. Now, first thing first, when I first started, I studied these individuals because he thought to be the best investor. I realized one thing, he only made money after he passed age of 60. Only past age of 60 and he started investing in the market at the age of 13, 14. I said, my God, he started so long ago. By the time I was interested, I was already way past that age. And I realized one thing after studying further, I even attend seminars about his investment strategy. I realized his investment strategy may not be suitable for most people in Singapore. I'm not saying you cannot, but I think most Singaporeans find it very difficult for the basic reason because his strategy is not just a strategy per se, it is a lifestyle. This gentleman here make a lot of money but live like a poor man. Are you okay with that? He really lived like a poor man. He never have a mansion. He never had private jet, and he still eat a burger every morning for breakfast. All right, so he's really lived like a poor man. But don't get me wrong, he's very generous. He donated most of his wealth away. So it's really a lifestyle, and Singaporeans find it very difficult to adopt the kind of lifestyle. Not because we cannot; it's kind of difficult. All right, because our car is just too expensive, and our children education is just expensive. Okay, I think for those people who have been in Singapore for a long while, unless you're foreigners, you understand what I'm talking about. So because of this, we find it very difficult. We still want to make a lot of money and we still like to spend. So I decided to actually move on and I discovered this gentleman is Sokota, and Sokota actually turned $5,000 to 50 million in 10 years, and that is 300,000% gain. This gentleman is hardly known. He has 6 clients only, and he interviewed his client before he can accept them. And many of them are just very successful. All right. And one of them actually decided to actually cash out. So he left with 5 clients. Okay. Now he's not alone. Richard Dennis and William I heard they turned $400 to 200 million in 10 years, 400,000% gain. Now $400 everybody have, but in only a short span of 10 years, 200 million. I said, this is insane. How come nobody talk about them? It's not alone. Michael Marcus, 250,000% gain in 10 years. And Bruce Kovner is 80% gain for 10 straight years. This is almost like doubling every year. I said, this is outrageous and nobody talk about them. Now, there's something common among them, and that's the reason why you don't see them featured in television and radio. They make money without having to know what happened tomorrow. They make money without having to know what happened tomorrow. And this is something I like. So I don't have to really bother too much about whether Federal Reserve is going to cut interest rate or not, or whether the Japan is going to increase the rate or not, and whether there'll be political tension. Because why? All these things will filter through. An important thing, they're all reflected in the chart. Because the chart reflects the transaction of the buying and selling and reflect the mass psychology of all the participants in the market, including retail investor, all right? But primarily institution. Retail investor we can follow, all right? In some market, it could be different. In China, the retail, the percentage is much bigger than many other markets. Okay, so my philosophy and what I do is generally in line with them, okay? Now, I want to quickly jump into it. First thing first, why market go up? Don't need to make things complicating. Market go up recently because money is flowing to the market. In other words, liquidity. So when Federal Reserve decided to cut interest rate, they generate a lot of liquidity into the market. Is it okay? So because of this, market moved up. Okay. And why market moved down? Liquidity is leaving. So there are 3 major sources of money. First source is people saving, investing more. People like yourself, very thrifty, do not anyhow spend, save, and then buy share. First source. Second source, people, institutions shifting money for other kind of investment. There are only a few major asset classes. All right. If gold is no good, you sell gold, you buy stock. If bond no good, sell bond, buy stock. If property no good, sell property, buy stock. So basically, few major asset classes, money are floating. Okay. This is the second source. Third source of money, central bank lower interest rate, increase money supply. Now, which do you think is the greatest source of money? Anybody? If you can, just type into the chat box. So the greatest source of money is the last one. All right. I'm sure you're familiar with that. Federal Reserve has been in the news. And likewise, the central bank Europe also cutting interest rate. So all this generate a lot of cheap money in the market. Now, when the money gets too cheap, right, there's no point holding money on. It doesn't make sense. Right? For a long while, before COVID, COVID was the one that actually drive up the inflation. For a long while, the interest rate was very low. It doesn't make sense to have fixed deposit one. It's only subsequently because of the inflation, central bank increased interest rate to a very high level, and then suddenly fixed deposit become attractive. And a lot of people queue. I'm sure you read about it in the newspaper. People queue to put money in the fixed deposit. Okay, so central banks generate the most money, all right, the greatest source of money. Now, central banks do not print money and go to the market to buy share. They don't do that. Their role is not that. It is the institutions. They take advantage of the cheap money, go to the stock market to get better return. So because of this, we're interested what the institution do with the cheap money. Is it okay? We're interested what they do with the cheap money because all these are reflected in the chart. Clear this. So for a long while, we are not interested in Hang Seng, China, Hong Kong market. We are not interested. Why? Money is leaving. Now money is going back. I'm sure you know about that. Huh? So all these are what? Driven by institution. Now retail investor is only a portion of it, but mainly institution. Huh? Now the next important thing you need to understand is market cycle. Market is always in an endless cycle and there are 4 stages to the cycle. Number 1 is basing, number 2 is advanced, number 3 distribution, number 4 decline. 4 stages. It's easier to look at a diagram. This is basing. This is advanced, you can call it bull market. This is distribution, sideways again. And this is decline, you can call it bear market. And it go back to basing stage again. So 4 stages, spring, summer, autumn, winter, and go back to spring. And the cycle just repeat. Okay? The next cycle could be taller, could be shorter, could be narrower, could be broader. It doesn't matter. It is always in the endless cycle. Now, never stay in 1 and 3. 1 and 3 is a waste of time. But for some reason, a lot of people like to stay in 1 and 3. 1 and 3. A lot of people like to stay there. Right? Now, stage 2, you go long. Long is not long term. Long is to buy. Stage 4 is sell short. If you don't want to sell short, stay cash. So remember, stage 2, you buy. All right? You buy. Stage 4, you sell short. If you don't know how to sell short, stay cash. Don't buy. Now, if you don't buy, then you can't lose money one. Okay? Now, this is S&P 500. This is stage 1. Beginning of baby boom, March 2003, stage 2. Stage 3, subprime crisis, stage 4. Now, stabilized, stage 1. March 2009, stage 2. Bull market started. This is more current. This is stage 2. All right. And then we have stage 3. This is the recent bear market in US. Stage 4 and stabilized, stage 1. And this is what happened right now, stage 2. All right. So on the long term, stage 2. This is Nikkei 225, stage 2, stage 3. All right. It may fail. This is your black swan. This is your COVID. Move up, stage 2. Sideways again, stage 3. And then you have stage 2 and then stage 3. And this is a carry trade. The one that people freak out. And now it bounced back. So it's very volatile right now. You need to normalize. This is a standard thing. Do not go and chase stock. Stock need to normalize one before it catches its breath and move again. This is STI. We have stage 1, stage 2, and stage 3. So we are over here, stage 3, testing the previous high in 2018 here. All right, we test and we have a pullback. Now, whatever the case may be, this run itself has generated a lot of profit if you have traded the right blue chips. In particular, what? The banks, the 3 banks, Singtel, SGX. These are the blue chip that actually, now STI is 30 component stocks. Only recently, REITs, right? Because of interest rate cut. And it's never because of this, it's always in anticipation. Now, for those people interested in REIT, you notice when the Federal Reserve cut the 50 basis point, right, the next day our REITs corrected. Is it correct? So market is always anticipatory in nature. You do not have to wait for the facts to happen. You just have to anticipate. All right, market is based on that. But important thing, I don't want you to jump the gun. I want you to study the chart. Why? Because the chart is the language of the market. Okay, so these are the core principles you must know. Because once you understand the environment, the interest rate environment, it will tell you on a macro basis whether you should be bullish or bearish. Especially those people who are passive investor. I'm not too sure anybody here is a passive investor. Passive investor lose a lot of money. But if you can understand what I just mentioned, then you can recover. All right, you can be profitable. Doing very little, but remember, it's a skill set. You still need to commit the time to go and read, to go and find out. Okay, you don't have to look at it every day, especially if you are passive. But you need to look at it maybe every week, every few weeks. Right? Passive investor, you're absolutely all right. Next thing, how to position yourself for profit. Ask yourself this basic question: is your investment backed by a sound strategy? A lot of people never ask this question. Even if you have a strategy, right? A lot of people hop from strategy to strategy. It is a fact. Because and there's nothing, it's not your fault also, no. It's just that a lot of people may not tell you enough. Because not necessarily you're suited for that kind of strategy you have learned, no. You need to understand yourself, no. Some people is not suitable to trade long-term one. Some people is suitable to trade short-term one. So you must understand, okay? So a lot of people do not ask the basic question. They think there's some kind of magic formula, and you get this magic formula, you make a lot of money. No, it's not. So as I mentioned again, I only tell you the truth about trading and investing. All right? No hype up. This is our commitment. So you got to ask yourself these basic questions. But in today's context, because of social media and all those things, there are a lot of sharing, a lot of what recommendation, a lot of tips. A lot of people get you into their, I don't know what, Telegraph group and things like that. I don't know how they get my contact. I end up in many groups, I have to actually block them. And then if you listen, you have week there, you listen to them, then what happened? Today you follow A, followed by B, followed by C, followed by D. Then over time, what happened? You're just confused. And this has been an experience with majority of investors, including myself, long time ago. All right. And because of this, right, 95% of investors actually lose money over time. Now, this is bad news. But good news for you, 5% make a lot of money. All right. They make a lot from those people who are actually very happy to contribute. Important thing, ask yourself, are you the 95% or are you the 5%? If it happens to be 95%, you got to ask yourself the next question. How can you be in the 5%? They make money from the 95 for whatever reason, just love to give it to you. And trust me, there are a lot of people out there very happy to contribute one. They are extremely happy to contribute one. Really. Not because they want to. It's just unknowingly they are contributing all the time. Right? Now, to help you to actually understand this in proper context, the bottom 50% are the compulsive losers. This will come and go. New wave of investor will come in and cannot slaughter and you'll move on. So this bottom 50 is the compulsive gambler. The next 40% or so are the people who make some lose some, make some lose some, but nothing much to show on. It is only the top 5, top 10% that are consistent winner. So you want to be here. So a lot of people got stuck here. All right. And because over there, they make some, they lose some, but the fact that they make some, they tend to actually stay in very long. But these are the people, all right, that need to actually put in the extra effort. These people gone, man. Don't need to say. They're not interested, man. They're not interested to learn. They're only interested in gambling because they like the thrill of it. Okay. Now these people here put in effort, but doesn't seem to go anywhere. So it's important, and some people can be stuck there for decades. You want to quickly get out of this. Because as long as you are there, you are contributing, but you're just contributing slowly. But over time, it's a lot. Okay. So you want to quickly get out of this. So where should we focus? Now, I'll give you a clue. If you look at this diagram, what comes to your mind? Now, I do see familiar name here, so you may know what I'm talking about. Can anybody venture to answer? Now, if you look at this, what comes to your mind? What am I trying to drive at? Yes, momentum. You are looking at motions. Okay, so my focus is actually momentum. Now, it doesn't matter. Even if you're a long-term investor, you also must look at momentum. So momentum is just underlying everything that moves, no? Because without momentums, you just cannot actually be profitable. No? Do not trade dead stock. Dead stock with no momentum. One. So why are you trading dead stock? But a lot of people like to trade dead stock. Why? Because usually dead stock are cheap. And they like things cheap. This is the problem, which I'll discuss later on. So invest in momentum. So why momentum? An object in motion stay in motion. Now, these motions are not caused by you because you are too small. It's caused by institution. Institution where they buy a company share, they don't buy one time. They continue to buy. Then object in motion stay in motion. Stock tend to move in a line of least resistance. Just like a car, it's easy for the car to move forward than to stop and reverse. Because to reverse need a lot of energy. So it's more likely to continue rather than stop and reverse. To reverse, need a lot of energy to actually move it down. Now, next thing is very important. Before there's a change in price, there must be a change in momentum. Now, we are all interested in a change in price, isn't it? But underlying that is momentum. Before that can happen, there must be a change in momentum. So that give me a clue why focus on momentum. I give an example. This is Costco. Now, I'd like to actually do this. Why? As I mentioned before already, most people are very lured by the hype. Okay. They are not interested in the truth. But the fact that because I'm committed to this when I first started, And I think it's important because I don't like to be conned by people. I have been conned by people before. I've been conned by Americans before. Attend the workshop, pay a lot for it, but I realized actually I learned very little. And we are all impressed because of the thing they show, but actually end of the day, it don't really help. It doesn't really help me. It's only subsequently I learned from the others, in particular one of the hedge fund in US, that I began to be clear. And there are very few people like this you can actually learn from. This unfortunate. And right now with YouTube advertisement, I say, my God, including some Singaporean trainer, I said, my God, how can they do such thing? But not very nice to mention name. But I hope that you are wiser and you understand what. And I upfront already tell you that trading is really a skill set. It is an education. And once you actually get yourself armed with the right education, nobody can take away from them. And you're wondering why I didn't know earlier. So I like to actually show you this because for one basic reason. A lot of people lose money because they fall in love with their favorite stock. And I want to emphasize this. If you look at your portfolio right now, okay, your favorite stock is the one that costs you the most money. Your favorite stock is the one that costs you the most money. It was good, but when it turn back, you cannot accept it, and you still think it's good, and you hang on to it, and eventually you can return all your profit and suffer losses. Think about it seriously. All right. So that's the reason why I want to emphasize this a lot. Look at Costco. Momentum work. The stock went up 8,000%, to a high of $8.20 before it collapsed all the way now penny stock. Was it the darling? Yes, people believe it's good. Why? Because China. China is opening up. Right? This company is shipping. Right? They are the factory of the world, right? They ship things out. Right? So it should be okay. Right? Gone. This is AM. Momentum still work. What happened to AM? Gone. All right. Gone. Here on making new low. When the market is so hot, it's still making low. Now it's planning to reverse, but a lot of headwind. 10 cents. Momentum work. And I'm sure you know 10 cents. This is 10 cents again. Momentum still work, whether up or down. Positive momentum up, negative momentum down. Now 10 cents is trying to recover. Now, because of stimulus measure from the Chinese government, important thing is you got to wait for the next down wave. If the next down wave collapse, it is gone again. The Chinese government had to introduce more measure. Otherwise, it's gone. Why momentum work? Let's continue. Natural buyers with strong stock. When the institution buy a company share, they don't buy just because the product is good. No, they buy for a simple reason. Is that good earning? And in particular, they're interested in earning momentum. The current quarter must be a lot better than the last quarter. The future quarter must be a lot better. Now, remember, market is always anticipatory in nature. By the time you read, it's too late already. Market is forward-looking one. So if they are not making a lot of money in the futures or anticipate to be making a lot of money in the future, the institution will sell now, not later when the facts come in. No. The smart one will sell beforehand if they can anticipate that the earning is slowing down already. So remember, they are still making money, but they are not interested. They are interested in only whether there's earning momentum or not. It must be double, triple digit growth. If you cannot do it, you're just stagnant. And they are very brutal. They'll move on to another stock. The technical trader are also interested in momentum, but they're more interested in price momentum. All right? Because the price momentum does reflect the institution action, which I'll explain later on. Now, to help you to appreciate and understand better, if you go to hawker centers, which you have never been before, and you're looking for very good food, what would you do? What would you do? Anybody? You go to hawker center, which you have never been before, and you're looking for very good food. How can you tell? Anybody want to help me out? Yeah, you're looking at the queue, the longest queue. I mean, standard one. Standard one. I happens to be at Toa Payoh, all right? And there was this hawker center, no? And the hawker, I thought was quite nice, no? Because the offering, but I realized there's one store that was extremely long queue. And I was very curious, and I was asking people what they're eating. Then he said, Mi Hun Kueh. I said, my God, I didn't know Mi Hun Kueh so nice, like a long queue. Anybody familiar with Toa Payoh Hawker Center I'm talking about? Somewhere near Lorong 8. I was so surprised. Why the long queue? I don't like to eat mee hoon kueh, no? It's not char kway teow or what, it's mee hoon kueh, no? So I was thinking, I'm so sorry about it, but the queue is extremely long, so must be nice. One fine day when maybe I go there earlier, then I avoid the queue, I'll try. So you go to the longest queue, you get good food one. So this happened to be a fish soup, and you like fish soup, you queue. If you don't like fish soup, you go for the second longest queue. Now you got good food generally. Now after you finish the food, they got 100 store here. You can go and interview the individual storeholder. How you come up with your recipe, how you actually make your sauce, how you source your ingredient. You can ask all how you marinate your chicken, whatever it is. You can ask them how you make your chili, whatever it is. Doesn't matter. This is called fundamental analysis. But I only can tell you one thing now, because I'm very practical. We can never do better fundamental analysis than the institution. I repeat, we can never do better fundamental analysis than the institution. But there's something retail investor can do. We can see what they do with the research. Is it correct? We can see what the institution do with the research. Did they buy? Did they sell? Because all these are reflected in the chart. So I make my life simple. So what you need to do if you are interested in doing the study, look at the first 5 stores with long queue and study them. The rest don't need to see. And I will explain to you why the rest don't need to see. I will explain to you later on. Next, participate in strong sector, different part of economic cycle. Now, if you're in the market long enough, you realize there's this thing called the sector rotation. During COVID, it's very obvious. The healthcare stock is very strong because everybody confined to the home, you all worry, all wear masks and things like that when we go up, isn't it? So healthcare stock was very strong. And then tech stock was very strong because we are confined to our house. We only can communicate using technology. So technology stock was strong. After the crisis is over, which sector is strong? Recovery theme. Your aviation, your cruise liner, all right, all the tourism related one, all right, even the ocean park in Hong Kong, I remember I traded the stock before. It was very strong, recovery theme, all right. And then now what is strong? At one stage, not now, AI was strong. Now a bit stagnant, okay. So AI was strong. Before that was EV, right, isn't it? I'm sure you know about that. So there's this sector rotation one. And in right now, US, what is strong? Nobody believe me. The industrial stock is strong. The engineering stock is strong. The military stock, all right, you know, the one that actually produce all the warplane, all the arms, all the weapons, they are strong. Sector rotation. That is weak. Some of them is okay, but weak. Consolidating. All right. So participate in strong sector in different part of economies. Now, if you can do this, you got highest return, shorter time. All right. Now, you want to look for momentum stocks. You are looking at market leader. I call them the champion stock because they are in front, they are leaders. Now, this is important. Remember, just how I tell you, the rest of the stock don't need to study, because in any market, 20% of stock capture all the gain. 20% of stock capture the majority of the gain. In any market, there are only a few large winners. So the rest are mediocre. Don't need to study one. Don't need. Really, don't need. Because this stock cannot produce a good return, especially those this side, unless you want to short. But a lot of people like you study there. Why cheap one? Then wondering why you lose money? Why you buy? Because you like the thing here. You like the mediocre. You don't like the leader. So remember, in any market, it's the same one. Okay, there are only a few large winners. So the rest of the store in hawker center don't need to study one. Study the leader only. Okay, why champion stock? Quick momentum for short-term trading. Now remember, all this momentum is created by institution. When the institution move in, it causes ripple. The ripples are the one that we actually trade for short-term. Prior position over time, mid-term investing. How is this so? When they actually move in institution, it causes ripple. If they continue the ripple change to evolve into wave, the wave allow you to do mid-term investing. All right. So that allow us to do medium-term investing. Okay. And because we are generally focusing on the same stock, you have better consistency, and consistency is important when we do compounding. Okay. Now I'd like to show you from the past right to the present for one simple reason. Never fall in love with stock. Never. You can relate it to yourself. This is E-Zone. In 2013, the stock went up 700%. What happened to this stock? Gone, suspended. Spanish stock suspended. Was it a good stock in the past? Yes. But remember, there's a cycle. Don't fall in love. 2004, Oxley went up 245. This company introduced shoebox apartment. People go crazy with a shoebox apartment, and then the stock rally. What happened to this company? Gone. You know, value 2015, 350%. It was so good, taken private by competitors. 2016, CMC go by 178% only 2 months. Why? Because Bank of Japan introduced negative interest rate. And ECB also negative interest rate. And because of this, people jump into gold, and Singapore CMC go by rallied. This stock recently run, but it lacked of liquidity. It was difficult to trade. But at that time, liquidity is very good. And this is a very nice move in only 2 months. 2017 SunPower, 120%. A lot of people don't think SunPower can run, but it ran because they don't like the name. So a lot of people have this type of opinion. Later, I'll share with you more. China Sunseek, 180%. This stock recently run. All right. Why? Because of the Chinese influence. Because it's a Chinese related stock and Chinese stimulus measure, the stock benefited. Global Investcom 292%. All right, 2019. And this is Mentec. I'm sure you know. This is the COVID crisis. The stock went up 1,600%. Grand Venture 2021 outperform High-P, outperform AEM, UMS, Franken. A lot of people don't believe this stock can outperform this popular name. Yangtze Jiang 2022, 95%. So for a long while, we don't have blue chip. Now reach up number 1. Last year, 2023, Dynamic 75%. Hopefully by now you understand Dynamic is actually, it's going to be taken private. The stock gap up. So before that happened, the stock had been running. Did you capture any of them? Make a commitment. If you ever need to hold stock, make sure the stock move up. Stage 2. Don't go and buy something, don't go anywhere. Okay, and you can lose a lot of time. And when you lose a lot of time, you lose your patience. And once you're frustrated, it affects your psychology. All right, as a trader, as an investor, you need to have strong psychology. Okay, let me just show you some of the champion stocks that you can relate to yourself. 2017, you have AEM 400%, High-P 270, Alliance 265, Sunrise 155, Elysium 132, UMS 117, and STI is 11.2, not too bad. But you take a look at the difference between individual stock, the leaders, and the broad market. The difference is staggering. The difference is huge. Now, I purposely actually highlight this because I want to draw a lesson. If you take a look at AEM, High-P, Sunrise, Ellipsis, UMS, you notice they belong to a certain sector. Is it correct? They belong to a certain sector. These are your semi-con stock. Sector has the greatest influence on the stock price. I repeat, sector strength has the greatest influence on the stock price. Now, if you are not trading any of these things, then there's some issue with the stock selection already. Right? You need to select stock in a strong sector. The only odd one is Alliance Mineral, and this company is dealing with EV. So that time EV was hot because they are the one who produce what? My lithium. Lithium is used for EV battery. Let's continue. 2019, I skipped 2018. Global Income is 300%, REX 272, AM 145, Penguin 139, Franco 134, High-P 73, and STI is pathetic, only 3.2. Look at the difference again. This is 300%, and this is only 3.2. So if you actually invest in the broad markets, your return is pathetic. Take a look again. You have AEM, you have Franken, High-P. They are in the same sector. So you should be participating in that sector. Because if you're not participating, your return is not going to be good. Fast forward 2020 October, you have Mentec 1004, UG is 1003, Jiutian is 600, Top Growth 342, Riverstone is 269, iFast is 260, and STI is minus 18%. This is very bad. Take a look at the stock. 1,000 over percent when the market is down almost 20%. But if you are focusing on a very strong sector, which happens to be healthcare, these 4 stocks are healthcare. They are glove manufacturer, PPE manufacturer. Look at it. They are not negative. They are extremely positive, but the whole market is down 18%. So even if you long at that time, are you okay? No? When this is bad market, no? But you long, you make money. If you short, it's okay. I will show you later on. In the bad market, you must know how to short. If you don't know how to short, never mind. Just don't buy. Now, what happens to all these healthcare stock? Gone. Never fall in love with stock. I know of people who are still holding Mentec now. I remember I went to a certain forum and people inside there talk about Mentec and they're holding it. I say, my God, it will never recover. Remember the leader moved because of some catalyst. Like for example, AI, that's a catalyst. EV, that's a catalyst. COVID, that's a catalyst. You don't expect another COVID, unless another COVID happen, touch wood. The stock is gone already. You can write it off. Take some capital back. And I only can sympathize with people. Because before COVID, I did a talk for a company called City Index. I'm not too sure you know them. City Index is a CFD provider. And there was a lady who actually refused to let me go. It was in the evening. Refused to let me go. He said, CK, I lose a lot of money. I'm holding a lot of these renminbi stocks, that kind of thing. I hold a lot of renminbi. I told her, hopefully she remember and do it. I said, why are you holding renminbi? Chinese is one of the worst market in the world. It all tied with the economy one. Chinese economy is no good. Renminbi will drop one. Right? She's holding a lot. She sold some of the share, holding it. And Hong Kong share also. I said, these are worst market. So what do you think I do with my renminbi? I say, you convert it to gold. Remember, that was before COVID. Now, if you had done that, I think she's quite happy. I'm not seen it before. I'm not seen her again. But I can recognize her if I see her. But all these are uncalled for one. And you can know yourself. You don't have to wait for expert to tell you. So remember, a lot of people lose a lot of money during that time. I know of a gentleman who lost 70,000 because he cut loss in DBS. This is not necessary. All right, help me to remember Mantex is the best performing. If you wish to take a photo of this, I just pause it for a second. Take a photo of this. Okay, let's move on. April 2021. I stopped there for good reason. Again, I draw a lesson for you to understand better. Southern Lion 175, iFast 124, Fortress 100, Del Monte 73, Hamwell 71, Innotech 67, iShares 63. STI is 30.2. Now, I purposely stopped at these areas because actually this is just after the recovery from COVID. And straight away, these two appeared. Now, you're wondering what is these two about? These two are actually iron ore mining company. Construction was also hot. When the COVID knockdown and all those things over, they have to ramp up their construction and they require steel. And iron is the raw material for making steel. So straight away, Southern Alliance Fortress appeared. Now remember, a lot of people dare not buy stock because they never heard before. It doesn't matter. I also never heard of Southern Alliance. It's okay to buy one. Just don't fall in love. Is it okay? It's all right. Just don't fall in love. So this stock actually went up and it was number one. Now, I purposely actually stop here is because SPH appeared. Best performing blue chip. Now, you ask yourself at that point in time, would you believe SPH is the best performing blue chip? Would you think it's possible? You notice that the whole this year got no blue chip, no? It's like impossible because fundamentally it's weak, isn't it? Yes. Subscription has been dropping, right? Less people read newspaper. They read free one. So how can it be good? And they diversify into property. I'm sure you know that. And the property portfolio is at Rojak. Best performing, no. 63. Answer come later. We know they restructure and now disappear already, right? Isn't it? But a lot of people have too many opinions, they did not trade. And the rest of the name, a lot of people don't believe. Del Monte, Hanover, they don't believe this type of stock can run. Again, too many opinions. Don't trade what you think, trade what you see. Help me to remember SPH best performing blue chip because I like to actually show you something, all right, to help you to anchor your lesson, anchor the understanding and lesson. Let's continue. This is 201, the end of the year. You have Grand Venture, outperform AEM, outperform Franken. These are the two names people familiar. But Grand Venture, same sector, outperform. Then you have Grand Venture 277, Mentec 194, Hourglass, iFast 154. Southern Line is still there. Samudara 121 and Broadnet 121 as well. SCI 9.1. But look at the difference again. Huge. 2022, take a look at the list. Yangzijiang 95, Semcorp, Capital Corp, Bestworld, Jardine, CDL, and UOB. If you look at the whole list, except for this one, notice there's a pattern here. Where do they belong to? They are blue chips. There are only 6 blue chip. Now, the rest of the blue chip total return is 4.1. If you choose the wrong blue chips, you can even lose money. If you choose the right blue chips, they are here. Remember, the top are all blue chip except for Bestworld. And Bestworld was suspended for 3 years. They only start trading in October 2022. October, November, December, 3 months only, they chop up 40%. They chop up 40%. Did you buy? A lot of people will not buy. Because why? This stock was suspended. This is network marketing. Very shady. It's the same thing. Right now, we have a stock called Lam Cheong. Did anybody buy Lam Cheong? Lam Cheong was suspended for 4 years. I think very shady of it. They not buy. We'll take a lot later on. Happy to remember Semcorp. All right, best work. If you wish to take a photo. Last year only, huh? Dynamics, best performing, 75. Food Empire, 63. Semcorp still there. Semcorp still there, 55. iFast, 53. Franken, 42. Delphi, 39. And SCI, negative. Think about it. Negative, no? Take a lot of the difference. So hopefully by now you understand. The leader always way outperform one. Way outperform one. Dynamic, help me to remember. Semcorp again. This is up to September. We're now in October. Bangguan 350, Oitech, Centurion, Dynamics. But it's going to be taken private. Wehe, Yang Zijiang, Bestworld, SCI 11.5. This is quite recent. Do you trade any of these stocks? For completion now, help me to remember Centurion. Okay, let's move on. For completeness, Hong Kong stock up to September, these are the best performing stock. Then you're wondering, where is Tencent? Tencent is not there. How about Alibaba? Not there. Oh, Meituan? Not there. These are the stock. All right. Now, first to be September. Hang Seng start to actually move. That's the reason why Hang Seng got 25%. Before that, it's actually pathetic. A few months ago, this is pathetic numbers. S&P 500 up to September. Take a look at a list of the stock here. There's only one tech stock, Nvidia. There's only one. In fact, there's one outperform. It's just I didn't want to actually put it because it's still S&P 500. But because it's a cheaper stock, so the percentage gain is not accurate. So I omitted it. Just like Hong Kong. Hong Kong, I will not trade anything like less than $1. Right? I will not. So take a look. Constellation Energy. This is a utility company. Home Aerospace, GE Aerospace. Wow. Again, this is utility now. Iron Mountain, Arista Network. I say, my God, how can this stock can run? It is. This is easy to verify. Best performing this year up to September. So what is a good training system? I'm going to drill down further. What's a good training system? What is our methodology? How we going to approach it? Okay. Now I created a very unique methodology. It's called expectation trading or expectation investing. What is expectation investing? Expectation investing means I must have the answer before the market open. I must have the answer before the market open. Answer to the following question. Number one, I must know what stock to buy. It's not aga-aga. I must know what stock to buy. I also must know when to buy at what price. Is it $1? Is it $2? Is it $2.50? Whatever it is. I also must know how much to buy. This is part of risk management. Very important. And you must know if I'm wrong, how much is my loss. I know my risk exposure beforehand. And lastly, I must know when to get out. I must have all these answers before the market open. Now, if you have all these answers before the market open, right? How do you feel? If you have all these answers before the market open, how do you feel? Now, after we get in, we look for two actions. Number one, when to buy some more. And lastly, when to get out. This is called expectation trading. I must have the answer beforehand. Now, I just explained to you the how, but I have not explained to you the why, which is more important. Like Simon Sinek said, everything starts with why. Very important. Why I do that? Why I do expectation investing? Why? Now you see, before you enter the market, you have all control. You can choose what stock to buy, at what price to buy, how many shares to buy. You have all control. Once you enter the market take over. You literally lose all control. The only control you have left is to get out. And get out, hopefully, if you're in the market long enough, you know, get out is the most difficult things to do. Is it correct? Whether get out with profit or get out by having small losses, it's always more difficult. Is it correct? Ask yourself, is it correct? Now, so before you enter the market, you have all control. Once you enter the market, you literally lose all control. And the only control you have left is to get out. And because you lose almost all of control, you experience psychological discomfort. And these two monsters will rear their head, fear and uncertainty. I only know one thing. If your decision is made from the state of fear, from the state of uncertainty, it cannot be sound. It cannot be sound. So that is the reason why similarly intelligent people, if they make the decision from the state of fear, from the state of uncertainty, they cannot make money. They cannot. Intelligent people, how do I know? I have given enough talk to those people who are very intelligent. Seriously, who are these people? These are doctors and lawyers. I was invited by SMA to go and present to their member, no? And all these are doctors. And when I ask them certain questions, they refuse to look at me. I know they are losing a lot of money. So it doesn't matter how high your IQ. Most people just cannot make it. Because the market has its own language. The language is just different from the economy. You must understand that. All right? Now, the whole idea of doing expectation investing is to minimize it. All right, the whole idea is to minimize it. We cannot eliminate, but we must know how to manage it correctly. Now I'm going to drill down further. How are we going to trade the momentum? Capture the explosive move. How to capture this explosive move? There are three approaches, but I'll discuss two: reaction swing and momentum swing. Take a look at these stocks. Now, not all stock can do this, only champion stock. Why champion stock? Because of institution sponsorship. Institutions are involved. Institutions are the one that create this pattern. Now, because there are people who actually has a tendency to take quick profit, and because of this, there's always this reaction. Now, why people has a tendency to take quick profit? Are you aware? Everybody has this tendency, unless you know. Otherwise, you will continue to do the same thing. Take quick profit one. Your profit is not big. You have profit, but not big. And then the losses is the same or bigger, you cannot make money. Long term, you cannot make money if your profit is always small. Why people have a tendency to quick profit? Now, this is something I normally don't discuss. It's because of this. Risk aversion. Because of risk aversion. So it's very natural for us, and unless you know how to overcome it, it's basically a process of conditioning. If you cannot do this, then you cannot do the deconditioning, then you will continue to take quick profit. Okay. Now, what was it? Because those people bought earlier, they make some money, they take profit, and then there's a retracement. And people who actually bought the stock many years ago, suddenly really the stock start to recover, they also quickly get up break even. And because of this, they have reaction. So here we have reaction, action, reaction, action, reaction, action, reaction, action, reaction, action. So the action are the one in the bubble. We're interested in the bubble. And this move is not small, no. 40 cent move, all right, 20 lot is $8,000. No. 8,000 is more than an average pay of an executive in Singapore, no. So you don't have to be active, you just need to be proactive. Again here, reaction, action, reaction, action, reaction, action, reaction, action. And that move itself, 10 cent, 20 lot is 2,000. Don't need to be active, just need to be proactive. So here again, very obvious reaction, action, reaction, action. And this type of thing sometimes it run for 20 bar, which is 1 month. Do we have stock even in Singapore like it? Yes. All right. iFast not too long ago, SIA not too long ago, and more recently, Singtel. All right. Now, somebody say, hey, I don't like to look at the market too closely. It's okay. Look at Willie chart. Reaction, action, reaction, action. And sometimes it can run for months. Just now I show you the S&P 500. GE Aerospace is one of them. Right? Home Aerospace, same thing. They do that. Arista Network, same thing. This is some called where's the champion stock. Reaction, action, reaction, action, reaction, action. So right now, this stock is trading sideways with some swing. All right, it's not trending. So a lot of people get carried away. Later, I'll show you. So you can do that on the weekly charts. And it's all right, right? Especially some market, it's better to trade on weekly, no? Unless there's something sudden move. Like example, what? Hong Kong. Hong Kong market is better to trade on weekly. Unless you attempt to do scalping. Now, I'm not encouraging people to do scalping because these scalpings are for people who have time. Scalping means you actually trade on a very short time frame. Huh? More like day traders. All right, I'm not doing that. Huh? I'm not encouraging people to do that. Okay, and US market likewise, because some of the stock are too much noise. So it's better to talk with weekly. Okay, this is the nature of the market, the dynamic of the market. Next, I'm going to discuss momentum swing. Momentum's derived from one word, motion. So over here, there's motion, right? I position myself here and I buy here. So some people say this, why do I buy here? Buy here, by the time I reach here, I make money. Objective is to buy at the right price, where the risk is the lowest, but the odd is the highest. Is it okay? Objective is to buy at the right price, where the risk is the lowest, but the odd is the highest. And the right price very often is not a low price, and a low price very often is the wrong price. So let's say, for example, people like to actually buy low price, like here, low price. Now, we don't have high side, no. We don't know what will happen. So assuming you like low price because it went down, and for a while, it just goes sideways. Nothing really seemed to happen. And one fine day, it go down. And now when you go down, what happened? You don't feel good. Now, over here, objective is to make money. You want a profit. Over here, you're not interested in profit. You're interested in no loss. Am I right? Because why? Psychology are weakened. Now, when a stock recover to a break even, you quickly get out. After you get out, market seem to no run without you. Anybody got this type of experience? Before you sell the stocks don't run. After you have sold the stock run like mad. Is it correct? Anybody here can relate to this? Huh? Anybody here can relate to this? So this is not something that, we know when we do it, it's unknowingly one. Why? Because psychology, you're weakened. That is the reason. So objective is to buy at a price where the risk is the lowest, but our chances is the best. Yeah, let's continue. 2014. I purposely highlight this one. A lot of people say, oh, CK, why you show me stocks so? Later I'll show you. In fact, later I'll do a demo so you can see what happened currently. Huh? Now, why I do this? Because you can relate better and I like to draw lesson from you. Now, remember, because this is what do you call that? A online webinar. All right. So the interactions become difficult. And the best thing is to do case study. You need to anchor your understanding. Because as a passive listener, you don't learn a lot. So I try my best to draw lessons so they can learn better. Because research found that actually the best way you actually learn is through interaction. It's like do case study, do brainstorming, do presentation. Now, this is not we don't have a whole day for that, because this is a 2 hours webinar. But I want to make sure you get maximum value out of it. So I want to draw the lesson from the case study. Now, Olam was shot down by a company called Muddy Water. All right, remember? Muddy Water. Muddy Water said this company has not been transparent. The way they recognize the profits is not right. Meaning what? They inflate the earning. No, that's very serious. Huh? And the stock actually sold down very badly. One fine day I saw this. I position myself and I go long when it break up. I have no idea it's going to gap up. All right. Now, answer come later. Temasek inject a lot of fund into this company. Now, I have no connection with Temasek, but I can see the volume. Can you see that? So I just position myself. Now, if you read news, very bad news every other day, would you buy the company share? Would you buy the company share? You will not. So again, trade what you see, not what you think. So I don't care. I just see this. I know the institution are there. Who this institution? I don't know. And I set up, there's a setup, I go long. And you can see subsequently the volume picked up very significantly. Market is driven by this. All right. Why you move up? Because money is flowing into the store. Now, people say this is lousy, but who is right? The smart money. Okay? Let's continue. To make sure you really understand what I'm actually talking about, I want to make sure you get it. Look at the right side of the chart, right side here. Is there motion or is there movement or yes or no? Ladies and gentlemen, is there movement? Is there movement? Can you see there's a gap here? General rule of thumb, trade in the direction of the gap. Trade in the direction of the gap. So over here, I position myself and I go long. All right, I take advantage of this momentum build here. Now, there's also one here, but unfortunately, it take too long, so I didn't bother. So again, our objective is to buy at the right price, where the odd is the best. Huh? Yeah, let's continue. Same, I'm not going to waste my time buying here. I only buy here. All right, and start here to close at 146, 48, 30-cent move. All right, so 20 lot, 6,000, which is above the average salary of executive in Singapore. This is Hong Leong Asia, strong inbound trend here, breakout. Stock hit a high of 312, 4-day 40%. This is a $2-3 share, though. 4-day 40%, 1-day 10%. Hell, a lot, no. Consecutively 10% for 4 days. Now, by this time, a lot of people say, CK, I also know how to trade. Buy here, sell here. I also know. Buy here, sell here. I also know. Don't buy here, don't buy, sell here. I also know. Now, we high side all very clever one. Am I right? I only can tell you one thing. We only can trade on the right side of the chart. We cannot trade a historical chart. We only can trade on the right side of the chart. And from here onward, I'm going to show you example from the past right to the present, 2024. How I actually move in and out. I've been doing this year in, year out, day in, day out. I have not changed the strategy. Why? Because I trade the psychology behind the bar, and the psychology of investor have not changed for thousands of years. Okay, and it will continue to be like this unless our psychology changes. Let's take a look at stock called High P. High P here, we have a gap breakout. I mentioned before we do expectation trading. Expectation trading means what? Must have the answer before the market open. So if you have the answer before the market open, assuming you have, what can you do, ladies and gentlemen? Assuming you have, what can you do? You can inform your reminder, right? Reminder, when it stop break 75 cents, right, buy 20 lot for me. Don't need to call me, I'm very busy. Yeah, you can do that. You can set limit order, stop limit order to execute the trade when it trigger. Am I right? You can. You can set alert, SMS alert, email alert, whatever it is. So this is what I do most of the time. I set alert. So I set alert high P 75 cent, 20th July. 20th July is here. This is 19. 20th is here. On this day is 20th July. On this very day, I know the answer is to buy high P when it breaks 75 cent. I know, 20th July. So I wait. 1, 2, 3, 4, 5, 6, 7. On the 8th day, it triggered. 2nd August, 9:56. It triggered, and I check. Oh, there's a gap. And notice this volume picked up. I go long, and the stock close here at 86 cents. This is a 15% move. Now I purposely highlight these stocks. Why? Because the first entry is here, the second entry is here, the third entry is here. This is the fourth entry. By the time I reach there, a lot of people say very expensive. Anybody here got problem buying a high price? Anybody? Anybody here got problem buying a high price? Yes. So this is something very natural because according to research, 80% of people cannot buy high. They only can buy low. With sufficient training and conditioning, you begin to realize what works in the market. Now, to help you to appreciate and understand better, assuming you bought a price at $1, this is you, and your friend bought the same stock at $1, this is your friend. Now, you bought a stock here, you make money. And your friend bought a stock here, you lose money. Why? It's the same stock, no, at the same price. Same price, so definitely nothing to do with price. Never mind, you let your friend buy cheaper because he's not convinced. 50 cents, your friend still lose money. You let your friend buy 30 cents, he still lose money. On the other hand, you buy 120, you make money. You buy 150, you make money. You buy $2, you'll still make money. Straight away, you know, it has nothing to do with price. Is it okay I pause here for you to sing in? It has nothing to do with price. Don't focus on price, focus on the direction of price. Don't focus on price, focus where the price going. It has nothing to do with price. Is it correct? Just like we know, not too long ago, we have Singtel running up. Singtel was making new high, new high, new high. Did you buy or not? You dare not buy because it was new high. It moved up so well, you dare not buy. Same. All right, stock like Centurion make new high, dare not buy. Nam Chong, dare not buy. Okay, So right now, Hong Kong market move up. You also dare not buy one. Is it correct? 80%. This is not my research. I didn't do this research. I learned from other people, right, who have done the research. 80% of people cannot buy high. Yet buying high is normal. Remember this, it is not the price, it's the direction of the price. Right? Until otherwise. Until it's proven that it's going down. So straight away, when you understand this, buying at a high price is okay one. As long as you know where your stop loss is. Let's continue. IP again, different year. Over here, we have very nice pullback and breakout. I set my alert 73 cents at 12 February. It triggered 3 later on the 15th right here. 1, 2, 3, 4, 5. I sell. Why sell? Because $1 is a psychological resistance. Why sell? Because every day gap up, gap out, gap out. Cannot sustain one. All right, cannot sustain one. And why sell? Because Singapore control at that time is 5 day. 1, 2, 3, 4, 5. About time. Sell. All right. Somebody say, oh, but CK, how come no MACD, no RSI? I don't use that. Why no stochastic, CCI, or I don't use that. I only trade like this. All right. But I put moving average, that's all. That's the most I put. Moving average, that's all. So there are 5 reasons why I get out. I show you 3. Trade exhaustion, because this is cannot sustain. Psychological resistance at $1. Time exit, because Singapore control, there are 5 days. Now T plus 4. Even US don't have contra, but there's a 5-day cycle which you need to be aware of. In case on the 5th day, there are a lot of selling, then you must prepare to get out. Now, this is OSIM, and I purposely highlight this. If I remove this, I will never find the chart again. I will not be able to find, because OSIM is taken private. But it actually have very good lesson. And why I want to highlight this, because too many people came to my office for help. Too many people. They lose tons of money. They couldn't believe OSIM keep on dropping one. For me, it doesn't matter one. I already taught you earlier. Now, there's a gap. The rule is to trade in the direction of the gap. In this case, gap down. I set my order 267, less than 267. Check short 1st September, trigger 3 days or 4th. Right here, I short the stock collapsed. Over here, first bull bar, I get out. This is 37% gain. All right. And I get out because this is an exhaustion move. Because after the huge gap, it's gone already. This is a terminal phase. This is the darling of the market. People love the product, love the management, and companies still making money. It doesn't matter. Why the stock drop? Money is leaving. When I say money, it's not talking about you and I. Institution money leaving. Let's continue. This one, SMRT. I'm sure you're familiar with this company. In 2015, the service of SMRT was very bad. Every other day breakdown, and they're fined heavily. In one of the occasions, the commuter had to walk the tunnel to come out. I said, my God. And then the tunnel got flooded in one occasion. So don't know where is it. And recently, SMRT also break down. I'm sure you're aware. But that's 2015. So the breakdown was very severe. No? So every other day, all bad news, bad news. Would you buy the company share? Honestly, ask yourself, would you buy the company share? A lot of people say, you would not. I set an alert 165, 20th November. It triggered 2 months later. So this alert was actually forgotten one. It happens to be in the system. It triggered 2 months later, 22nd. I said, my God, this is the bar. The volume picked up. I go long. You tell me, every other day bad news about SMRT, would you buy the company share? Would you buy the company share? A lot of people will not. For me, it doesn't matter. Why? The volume picked up. Stock run up. See, very obvious. The people who know already in the market, answer come later. LTA announced they bought over the asset for SMRT. SMRT just operate. They just get a contract, all right, and then to operate, that's all. They no longer own the asset. So they don't have to talk about CapEx, capital expenditure to upgrade. Don't need. Government take over, LTA. Is that good news? Yes, that's why the stock run. Now, I have no idea who are these people. No, a lot of people bought. No, I don't know who they are. Maybe LTA officer, maybe SMRT officer, whatever it is, they know. I just follow. I do not know. I just follow. Answer come later, and here I get up. 10% move. Why I get up? Because there's a shift in sentiment. There's no indicator. No? I just use this only. The price action only. Let's continue. Venture, everybody knows this company. I set my alert 1669 on the 14th, no? And I put 3 stars. This is very important. It triggered the next day, only 1 day. Advance notice, and the stock power all the way up. And that is 33%. Now, question asked, how can you tell the move has ended and you get out here? How? I thought candlestick here, this is a strong candle. Is it correct? To a lot of people, this is a strong candle, but to me, it's a sign of winners. Why? Because institution selling, so I better get out. This is Hong Kong stock Ping An. $91, 17th of January, trigger on the 18th. Let me share with you what happened. Now, over here, this is the resistance. This is the first attempt, pull back, second attempt, break. All right, and then here, gap. This is the bar that actually I'm concerned. So this is the day, 17. So I set a high here, which is $91, because after you break the resistance, all right, through a gap, there is a reaction. Can you see now? You reject the higher. So this is a reaction, a drop. So especially you break a stubborn resistance, there's this reaction. This is a sign of weakness. So I'm going to buy. I wait for the next day. If you trigger this, I'm going to buy. So it did. I trigger, it bought. Right? And over here, I sell. Why I sell? Now, how can I tell there's an end already? Because there is uncertainty on this bar. So I decided to get out. Notice the next day you get down. That's bad. Gone already. If I don't get out, I return all my profit. Now, I trade what I see. This stock cannot run, no choice. But I cannot force it to run. By holding it, I can't force it to run one. Yeah. All right. So I curated all these charts to draw a lesson. And this is SI engineering. It's very obvious one. So you must recognize this. This is COVID. Aeroplane cannot take off. Don't need to maintain so much, right? SI engineering is one of them. One of the candidates. 270, test low, check short, 24th January. All right. I know the answer. And trigger 4 days later, right here, I short the stock. And it plunged. And over here, I covered at the support. There was a support on the left side. And that is a 45%. So this is actually no-brainer, right? But you must recognize this. Now, a lot of people, they're not short. That's the reason they miss this opportunity. Then the COVID came, right? Mentec. 29 cents. Tag long, 15 June. It triggered 18, 3 days later, right here. And the stock power all the way up, and it closed at 87, 200% gain. In only this couple of days, no. Now, if you wish to take a photo, help me to remember this alert, 29 cents. Mentec. Now, all this SMS is there and there, no. I can never create this. This is from telco one. Okay. Mentec, 29 cents. Later, I'll show you more. Fuyao grass, 42.45. All right. 29th of December, I set the alert. It triggered on 31st. Now, 31st happened to be this bar. Take a look at the volume. So remember, on the 31st is half day in Hong Kong. Half day in Hong Kong. So because it's half day in Hong Kong, I don't want to take my chance because the volume is so low. So even full day, right? Even full day, I don't see the volume as it's going to be high. So this is a doubtful break. It may be a false breakup. So I wait until you clear the high. Then I go long. Or 4th of January, the first trading day in the new year. All right. So I trade only the next day. Even the trigger happens to be the 31st. I only buy it on the 4th because the low volume, it may be a false breakup. And over here, this bear bar here, all right, when it reject the high, I get out. Why? Because there's anomaly. So a lot of people cannot recognize this. They hang out to the stocks and they can return a lot of profit. So this has been the challenge with most people. Now I showed you before, SPH best performing blue chip, and this is how we trade. 129 check on 25th, and it trigger on the 26th next day. Move up, pull back, did not hit my stop loss, finally recover, and here we get 196. And after that, the stock gap down. Some people say, well, you know how to get out 196, because to get out, I set alert also. This is 50% move. I set alert to get out 196, going down, check. 16th of April, trigger on the 19th. So on the 16th, I already know. 3 days later, I get out. So nothing to do with me. So you must know how to actually recognize this, all right, and get out. So to go in, I have alert. To get out, I set alert also. Okay, to warn me. Let's continue. It's the same call. 203 here, break. You notice I know the answer. The third next day breakout already. Stop power up. And here I get at 296. Now, again, this is the 46% gain. I set alert to get up. You can see 296, test upper channel line, watch to take profit 13 April. All right, it triggers 6 days later. So usually I got capital letter one to warn me one. To go in, don't have all small cap. To get out, got big cap one. So they get up. After that, the stock test failed. Now, of course, people say, what is this test upper channel line? So this is the channel. So it tests here. This was test before. Repeat the test, and then the next day got bear bar. Oh, forget about it. Here is the last attempt to get out. Rejection on high is a sign of weakness. If you don't know, it break this. This is serious. And the stock went down for a few months. Okay. This is 2022. Best 215. Notice I put there at. No, I hope the position. Here I buy some more. And here I get out. Again, I set alert to get out. Test high volume resistance. This is a high volume resistance at 20253 right here. I know the answer on the 26th trigger on the 6th of Feb. This is an 80% move and it failed. So plan yourself, all right, in advance. So you're calm, confident, and composed. Remember, expectation trading, I have the answer beforehand. I'm just prepared. Last year, best performing stock dynamic. You can take a look. 27, trigger here, move up. 24, 42%. So we achieved two things. No? Which stock to buy, which stock to sell short. Precise entry price before the market open. All right. So year in, year out, we trade only the champion stock. Because if you cannot make money from a leader, right? You can forget about the other stocks. Important thing, we know beforehand and we are prepared. And we manage our open position. All right. In case we are wrong, we must know how to get out. And we know it before the market open. Now somebody will say this, so what if I know? I'd like to show you some email from the past. And I purposely curated all this email to draw lesson to help you to appreciate, understand. Now, this happens to be the previous bear market, 2008. In case you're wondering, wow, CK, you showed me so long ago. Now, later, I'll show you something more recent. 2008, this market is worse than COVID, no? Because this is dealing with banks. And bank is the lifeblood of the economy. If they stop lending money, economy just don't work, slow down, everything stop. So Patrick called at the time, sent me this email. Now, this email I did not solicit. I'm not a person who's going to do this sort of thing. Right? I'm no good in marketing. Right? Students sent to me. Now remember, criticize everybody, criticize. Phrase is difficult one. And I never asked, no. They sent to me. Now, this is Patrick Cole. Send me a thank you email. You tell me this is a subprime crisis. You send me a thank you email. And he mentioned this. I have never shorted before. No. Never. I came in the competitions with the return more than 200%. More than 200% is more than 200,000. I highlight Patrick Cole for three simple reasons. Number one, he's a 61-year-old retiree at that time. Number two, he has never shorted. This is the first time he short. Number three, when he came to us, he came quietly to learn from us. And of course, we were wondering, why must come quietly? Because he don't want to inform his children, especially his son. His son is a fund manager. He feels that the son may be offended, that the father go and learn from somebody else. Now, what happened was, during the crisis, he actually made more than 200,000. He was so happy. All right. He straight away appeared in our office without informing us. He said, CK, I want to buy you lunch. So he brought me to a hotel. We ate lunch. And then in the evening, he sent me this email. Now, during the lunch, he told me the son is a farm manager. I almost choked. Now, the good news, very difficult to control. He told the son about it. The son couldn't believe it. Come and visit me in my office. And asked me a lot of questions. The farm manager cannot make money, no. The father made 200,000 there. The son cannot make money, no. And then look at his name card. My God, one string of qualification there. MBA, CPA, CFA, wow, whatever it is. But just cannot make money. So all these are not necessary, right? Seriously. In fact, some of the market wizard, no college degree. Right? So really, I'm not joking. Right? So you don't need that kind of qualification. Don't need. Unless you want to be an analyst, you want to write very well, then no choice. So next, I'd like to show you this gentleman. He's one of my best students, Kenny. In fact, I didn't show you later. You just remind me, this is another guy. Happened to be the same class. Kenny is a seminar junkie. He probably attend all the workshops in Singapore. That's why I want to show you, because you may recognize him. Now, actually, Kenny, again, I did not ask him to send me this. He sent it by himself. This is Kenny Lim Chicken. All right, in 2014, he said, I attended your course back in 2001, 3 years ago. All right. He said, based on Asia chart principle, but return pretty decent. Before that, he was more like a value investor. Okay. He said, based on Asia principle, pretty decent. The 3 year, he got 4 spreadsheet. All right. And the last spreadsheet is actually an IG account opened in June to focus on short. So all in all, 4 spreadsheet. So the first year, he makes 77,000 first year. Now, second year, he made 29,000. Okay. Now, third year, he actually made 32,000. And the third year, he had another account for shorting, and that is 13,000, 50,000. So the 3 year, he made 153. He started with 100,000. So that's 153% gain. And 1 year before the COVID, he told me, he came to my office, give me mooncake. He said he's going to migrate to Australia. And then he told me in the conversation that in 1 of the year, he make 2 times his annual salary. Now, this is a senior executive. So I reckon he made 200,000 working for people. So 2 times his annual salary means in 1 of the year trading the market, he made 400,000. All right. So that's very good. And that's why this person is very confident. Now he's very busy, okay, because of his work, but he can make that kind of money. Yeah. Something more recent, this is Cynthia. Again, take a look at the year. This is COVID. Now you was asking me about trading stop loss on weekly. I'm currently sitting on some profitable short as that means a few short. He only give me one example, Samco Industry. Right. Now reply her, say, got it, CK, thank you for the reply. Really glad I attend your course last year and got to experience the current market armed with useful knowledge and technique of trading. Very good I attend the course last year. All right. So she's prepared. And in fact, she got a sister to come as well. All right. Subsequently, got a sister to come. Sarah Wong. This is September 2020. All right. On a very personal, I want to extend my deepest gratitude to you for putting yourself out there to helping people. Now, here, in my 2 months in the broking firm, I make 70,000. Take a look at the last statement. I never felt this gratified. I never used this approach. Now, this lady is a fund manager. Sarah was a fund manager. She quit the fund manager job to become a prop trader at the broking firm, which I blocked it off. And in that 2 months, he makes 70,000. And I'm very happy for her. Remember, I never used this approach before. Obviously, a fund manager don't use what I do. Right? Now, all these people who are able to achieve the kind of result because of this program called Mastering Explosive Swing. Now, in this program, we capture short-term explosive move, ride the leader for outside gain. This is short-term trading for cash flow generation. This is capital appreciation. And we achieve it through the market leader. I call it the champion stock. Same stock, you can do both. Okay, now, in this program, I'm going to teach you how to find the champion stock for long, for short. Time it just right, not too early, not too late. Timing is important because it affects your psychology. Trade setup, if you know the setup, you know the breakup. So there are 4 trade setup for long and for short also. Now, you must know these 3 critical number. If you don't have this critical, you're actually gambling. You must know this number before you enter the position. How to write the champion stock for upside gain. A lot of people sell profit too soon. You must know how to restrain. There's a reason why a lot of people cannot do it. Comprehensive, because we cover short-term and major. Practical, easy. Now, remember, I cut down a lot of the unnecessary. Now, require some time. But again, I cut down the time required. Now, I want to do a quick demo so you can appreciate. So this is a charting software that I use, and I put my strategy inside here. Now, this is Share Investor Station. You can use any charting software because there's no proprietary indicators. Okay. Now, these are the market. All right, Singapore, Malaysia, Hong Kong, US. US got four folders. Singapore. And we're looking for swing, right? Asia chart, there's a folder here. Now, you only see this from Asia charts. If you go to Share Investor directly, there is no Asia chart folder. So look at SR string and you have long. Now, remember, you have long, you have weak. Day, week is for longer term. So look at this one here. This is for short term. And recent markets are actually much stronger, so your list a bit longer. So you can see the stocks here we identify. Let's say, for example, over here, this is Keppel. Keppel. So Keppel's, we have a stock detector and the alert price here is 675. So what is this alert price? Alert price means so the stock here 675. So when you break this, I'm going to buy. And I know the answer today. Today. Remember the report is generated 3rd of October in the evening, 1832, 6:30. After the market closed 1.5 hours, the report is generated. So I'm prepared already. So I set my alert. So if you know the answer beforehand, are you very stressed? Are you very stressed? How can you be stressed? So this is Kaplan China Trust. So Kaplan China Trust benefited from the stimulus measure. Again, there's an alert price, Kaplan China Trust. So it's actually 885. So when you break 885, I'm going to buy. So are you very stressed? So how can you be stressed? All right. Now, let me help you to with a simple example so you can understand a little bit better. So let's take a look. This is 25th of June. 25th of June. All right. So 25th of June, we detected these stocks. All right. 25th of June, market close. We detected the stock Singtel at 266. So we detected this stock Singtel at 266. Now remember, you take note 25th of June. 25th of June. Singtel at 266. So this is Singtel. All right. 266. Remember Singtel? 25th of June, 266, 25th of June. So this is June here, 25th of June, 266 is here. So I know the answer beforehand. Here. Here. When it break here, I'm going to buy. Okay. We know that on that day, 25th of June. Now let's take a look. Another report. 9th of July, 290, Singtel. 9th of July, 290. 9th of July, 290. Now let's take a look. 9th of July. Where's 9th of July? July is here. 8 is here. 9 is here. 290 is here. You can see this is the 290. Huh? So you notice, I know the answer one day before you break up. I know the answer one day before you break up. And to help you to appreciate, understand this better, I created a template like that. So the template also help you to appreciate, understand whenever there is a setup and the breakout, the arrow appeared. So again, this is where we know 9th of July, next day you break up. So you notice there is a lot of breakout. All right, and then it went down, and then further here we have breakout again. So this is something that we know beforehand, so we are prepared. And here we take profit. And in case you're wondering why we take profit here, later I'll explain to you. We don't wait until here. Why we take profit here, later I'll explain to you. But suffice to say, this is something that we do. Now, it doesn't stop there. No? Let me just show you. This is how I actually help my students. So this is my website, a member forum. All right, you log into the member forum. Twenty-eighth of March. Now I show you this thing is to highlight to you that I do it for the last 10 years for my student every week. 28th of March. Right now we're October now. So you got an idea of what I do all the time. Okay? But was not able to take out this resistance. So I'd like to actually see a break above this high here of 275. Samudara. mapping out a very nice consolidation pattern. So this is something you would like to actually observe closely. Notice after the attempt at this resistance, there's a pullback on lower volume. So I'd like to see if we actually take out this 785. Remember this pattern. Remember this pattern. Like a hum like that. Break this resistance. All right. And we know the answer on the 28th of March. 28th of March. Now I'm going to show you this. Because if you can remember the list which I highlighted earlier, Samudara is one of the champion stock. And I mentioned that in the videos for the student. Now, why I highlight this? Because this stock went all the way down and finally it did this. And this was the time which I actually told the student. Now, Hong Kong stock will do the same people, but you must know how to find the right stock. Can you see this hump? And I mentioned that time in case you have forgotten already, 28th of March. Now, let's take a look. 28th of March here. 28th of March here. Next day, break already. And take a look. After it broke out, it ran all the way. It's not high side. I told the student there and then, right? And this is how we actually achieve that. Now, can somebody tell me, just like I show you Singtel, right? I show you Singtel. Can somebody tell me a Singapore stock I've been running, driven by blue chip? Driven by blue chip. What blue chip is that actually caused it to run? Anybody? The bank stock. The bank stock, they run. But did you buy the bank stock? Now remember, this is not high side. High side all very clever. Take a look, 7th of March. 7th of March, I did a video for my student. Break below this low here, which is a 686. Let's take a look at the three bank stocks. Mentioned previously that actually the three bank stock actually map out very obvious consolidation patterns. The three bank stock, meaning the whole sector, it is quite evident to look at weekly. On the daily charts, it's probably quite messy. All right, so take a look at the weekly charts. So this is what happened. Now, after this attempt break, there's a pullback. Look for decisive break above this high here, 34.26. And any of these break must be accompanied with high. Remember, break this. Remember this tail, this black color bar. All right, I'm going to show you right now. There's no point high side. So this is, the triangle is still there. All right, and this is the bar. Remember the black color bar is this bar. Break this. We want this to be broken. Now remember, it was this pullback black color bar. Let me show you again. This bar. Move up, there's this black color bar. Decisive break. Now let's take a look. This move. This move until here is $10 now. There's a $1 dividends built in because they actually give 2-time dividends. There's a $1 dividends inside here. $10. You don't have to buy a lot. Just buy 2 lots. That's 20,000. All right. If you buy a bit more, that's okay. You don't have to be active. And this is not the only stock that do this. Let me just show you again. This is DBS, right? OCBC. OCBC. Again, you map out a consolidation patterns. All right, look for decisive break above this high here, which is at 1345. Again, very clear one. It's precise one. Okay, let me just quickly show you OCBC. So here's the bar. It actually broke and it ran up. And we know that when? March. Now, let me just show you something more recent. Now, remember right now, all the champion stock are resting, no? Okay? Let me just show you September 5th, which is quite recent. Okay, the last month only. Then I want to actually help you to appreciate, understand a little bit better. Now let's turn our attentions to some of the stock we'll be discussing. This is Singtel. Now, yesterday itself we have a nice breakout despite the market weakness, and this is a contraction breakout. So this is called a contraction breakout. Today's we notice actually there is this reversal bar, but the consolidations the volume is actually quite low, so that is a healthy sign. We'd like to look for a setup here and eventually take out this high here of 320. 320, very clear. Now remember, Singtel actually went down one. All right, so you must be able to actually know that it has turned up, and you must know what to do. Yeah, okay. Let me just change back this to daily charts. Yeah. Remember this bar here, this bright color bar here is the one we trigger. Is it okay? And I mentioned that in March, right here, this bar here, 5th of September. Sorry, 5th of September. Yeah. Can you see this bar? 5th of September, this bar. Break this high. So this again is not high side. And they make, yes. So you must know how to take profit. All right. So a lot of people do not understand. Mentioned, I will actually show with you, but before that, this is something very crucial, which a lot of people actually may not appreciate and understand. SGX. Market has actually strong showing despite weak market sentiment. If you notice, it opened with a gap but managed to recover very quickly and close at its high. Today, actually, we see a follow through. But unfortunately, the rejection high does indicate short-term weakness, likely to pull back from here and eventually look for a setup, look for a break above 1105. Remember, this is XGX. Remember this long bar followed by this short bar. We are looking for a break. This is the one, this bar. Did it break or not? Yes. See that? See the break? Yeah. Now, take a look at what happened to SGX right now. Take a look what happened to SGX right now. Very wow, very volatile. And I told my student, take the profit. Now, this is where I did. Take a look. SGX. Stop trade extension bar, okay? On high volume. Volume is largest over the last few months. This is an exhaustion move. So I say this is an exhaustion move. Can you see this? The next day this happened. And then like this. Rest. So there was an attempt again at this resistance, but failed. So if you know this, can you take profit near the close here? Yes, but a lot of people don't know. So you say, hey, how I know? So there's a difference because this is a language of the market. So it's not high side, I tell you this. High side all very clever one. Is it correct? High side all very clever one. Okay. Now, let me just very quickly. This is S&P 500. Okay, these are the stock detected. All right, these are the stock detected. And they all have alert price one. For example, this stock, Emergent. All right. Let me just plot this thing for you. Can you see that? There are a lot of trigger, no? Okay. Assurance. So you notice actually, hey, I never heard this type of stock before. Now you have a setup. Arista Network was one of the leader, which I show you one of the best performing stock. And sometimes because of the noise issue, it's better to look at weekly. So this is what happened. Now you tell me just looking at a chart, just looking at a chart. Do you think it's a lot better than many of the stocks? Does it make sense that these are better stock to look at? Right? But a lot of people only want to actually look at the stocks which is popular, and those less popular, you just have difficulty trying to reconcile. Right? I mentioned before, utility very strong. This is their utility. Okay, so a lot of utility strong. American Express. Okay, this one you know lah, huh? American Express. Consolidation, breakup, a lot of trigger. All right. So these again are the strong stock. Okay. Now, if there's a chance, I will show you more. But I want to quickly move on. Just like I mentioned, help me to remember one stocks in Singapore itself that went up 1,000%. Healthcare stocks during COVID. Can somebody tell me what stock I was referring to? Start with M. The healthcare stock. In Singapore, COVID, glove manufacturer, yeah, Mentec. So Mentec actually went up. But important thing, do you trade? Now, I have not known Mentec myself. Personally, I do not know. It's only during the time I detect the stock. And this is how we trade. Now, hindsight all very clever, no? But there and then, I have done the videos one. All right. I could not have done the video if I'm not interested. 17th of June, 2020. This is the year where the COVID happened, Mentec.
Now, Mentec had quite similar patterns as Riverstone's run-ups, and right now it's just hugging below the resistance level. Like to see break above the high here of 29 cents.
That was an alert I asked you to take photo. This is how the stock actually traded. So here we have the next setup, 30th July.
Let's take a look at Mentec. This is by far the best performing stock this year in terms of percentage gain. Notice this is what I mean by a sharp collapse in price, and usually tend to trade sideways, very much like what we have seen here. Right, but right now it's actually attempting at this resistance here. If you can pull back from here, that'll be good, and eventually take a short at this recent high here of 965.
So again, precise entry. 7 August before National Day.
Mentec, this stock has run ahead and is experiencing pullback the last two sessions. Again, it would be good if you can just trade sideways closer to daylight and eventually look for a break on the upside above the high of 105. Important if you can stay above $1, which is a psychological resistance.
This is how the stock actually traded. After I did the video, 100%. This stock total, there is 4 trade only. The whole run 1,600%. There are only 4 trade only. If you miss all these 4, too late. And I know people who attended a similar webinar like this, who told me they are still holding Mentec. It was gone already. There's no way it can recover to 1,006% gain. It's no more. All right. And I know people who hold stock until now. So you can see right now, we know the answer beforehand. This is called expectation investing. And then with the necessary posting and the debrief video, which I do every week, you can see why so many students are so happy. In fact, one of the students called it the 4D video. I say this is not 4D, this is for you to learn. All right, you must see what I see. If you don't see what I see, you ask. Okay, so this is something which the student actually benefited. Just like I showed you just now, there was another students in the pictures with Kenny. That was the student who actually called this the 4D video. And he sent me a message subsequently. And he actually makes 740,000. 740. And she said, I don't need to work. Now, for him, it's okay. Don't need to work. Why? Because he's single. No girlfriend, no car, stay with the mother. So he actually quit the job as a teacher. He just do freelance tuition only and trade more actively. And I'm very happy for him. Now let's take a look at some of the comments made by the students. All right, this is Yo Boon Hua. I wish I come 10 years ago. No? Pay CK 3 times the tuition fees. Pay. Why you pay me so much? Because this is peanuts compared if you can get 100 times from the market. You understand this? So that is similar to to somebody who pay very high rent to go to Orchard Road. Why high rent? Why? Because the revenue is high enough to pay for all those things. But you need the traffic. Same here. You pay me 3 times because you get back 100 times what? Now this is Olive. I purposely highlight Olive because she's a retiree. And in case people was thinking that I'm too old to learn, must attend, not 1, 2, 3 exclamation mark. No regret coming. Very grateful and very thankful. And this is a retiree. When retiree wrote this, no, he make entry, exit, stop bumming and playing arcade games. So simple. Now I don't want to say it's as simple as what he sound, but the thing is that because you know beforehand, it makes things a lot easier. Now this is Lee Chun Rong. And Lee Chun Rong actually said this, I wish I come in earlier. Those younger than me, you should come. Those same age as me, no excuse, don't come. Those older than me, I don't know why I should don't come. To him, it's no brainer. He's 21 years old. He said, I have no idea why you don't come. Right? He's already late. In fact, I'm quite envious of him because when I'm serious at the time, I already way past this age. Now, of course, somebody will say Lee Chun Long is young man. He know nothing. He's a greenhorn. I'm a seasoned trader. Now, let's take a look at this gentleman. His name is William Mott. He's a prop trader. What is a prop trader? Prop trader is a professional trader in a broking firm. They trade with no commission, but they got to share profit with the house, okay? And they are given very high limit. And this person has been a prop trader for 17 years before he attended my workshop. And when he attended my workshop, he actually wrote this in the feedback form, must attend. Now, if my program is good enough for a professional trader, is it good enough for you? I'm sure it does. Now, let's take a look at this gentleman. Look at his face. Do you think he's a local or foreigner? Anybody? This is a foreigner. He's an American. His name is Sean Ring. Sean Ring happens to be a chartered financial analyst trainer. If you want to be an analyst, you need this qualification called Chartered Financial Analyst. And before that, he was a vice president of Credit Suisse. By anybody's standard, this is an expert, right? Isn't it? But the expert still attend my class. After I attend my class, he wrote this. I wish I was taught 10 years ago. I said, my God, the CFA trainer said this. So you mean that actually the CFA get no much value as far as training is concerned? Otherwise, why the trainer would say this? I wish I was taught 10 years ago. That's a very serious statement, right? Isn't it? Now, a lot of people say we must attend the Armor class. No, the Armor attend my class. This is not the only one. There's one here, Norwegian. There's one here, French. And one here, British. There happens to be 4 foreigners, 4 Armor in my class. Now, most of the participants after attend the course, they all have regret not coming to the course earlier. And regret is very painful. All right? I regret I should have come earlier, that kind of thing. And the last one is a reminder, no. Should have attend earlier, screamer, no. It's a reminder. So must have lost a lot of money during this before that. All right. Now a lot of people attend webinar, they always give you money back guarantee. I don't do such things. This is not right. How to guarantee if you actually do not look at the chart? You don't do your homework. How to guarantee? But I give you a different kind of guarantee. I guarantee after you finish the workshop, right? You regret not coming earlier. I think that's a better guarantee. Is it correct? Yes. I'm sure it does. Now, mastering insurance teaching, investment is 2,398. If you work out, it's only $200 a month. Now, if you're an investor, right, $200 a month is small money now. Is it correct? Because your minimum investments per trade is already more than 10,000 there. So how can 200 per month be too much? All right, if you think about it, it's actually a meal a day there. A meal a day, no. A meal a day cannot be too much to invest your own success, right? When they put 100 or 1,000 in the market at risk, So a meal a day cannot be too much, right? Isn't it? So remember, your investments is 2,398, and it come a guarantee, regret not attending earlier, and regret very painful. And most of our students, every batch will have one. They all regret one, not coming earlier, because they solve all your headache and frustration. Okay, now take note of these 3 dates, very important. 27, 29, 30th, first day foundational. I'm going to teach you the market cycle. I'm going to teach you the characteristics of a running market. I'm going to teach you the characteristics of a sideways market. You must understand that. Because if you don't understand the environment you're in, right, you're just contributing only, You must know the environment. Second day, 29, we'll teach you the setup. Total, there are 4 setup, 3 core and 1 bonus setup. If you understand the setup, you understand the breakout. This is the time where you know how to find the price. Precise entry price. Like what I just showed you. You must know. All right? Because there is hands-on experience. We got to actually draw line on the chart to get an answer. Okay. On the last day, I'm going to teach you how to manage your position. There's no point having strong stock. No point if you don't know how to manage. It's just wasting the stock. That's all. It's like you have a powerful tools, but you just use it wrongly. The tools can kill you, no? All right. Tools is the double-edged sword. Any tools. Right? A hammer is a good tools, but use it wrongly, you hurt yourself. Okay. Improving your odds. If you have 5 stock, how you rank them? This one come in handy. Very important. In fact, a lot of students, after learning this, right, they find this extremely valuable. So take note of this 3 date, 27, 29, 30th. All this is to make your portfolio magical. That's the whole objective. Make it magical. Of course, at this point in time, some people will say, but CK, I have so many educators out there, so I'm not too sure whether you're teaching the same thing. All right. And maybe you already attended some courses. Maybe you're worried that learning the same thing. And then you're also not too sure about your support, that kind of thing. I can understand this. I only can share with you what the past participant has said. Starting from past until recent. This is Jervis Love, June 2014. The only course in Singapore, they provide so much support to make sure you get back your course. The only course there. Can you see the emphasis? The only course there. Now, this person must have attended a lot of courses, right? Otherwise, how is it there? Okay, now take a look. The arrow at the time he mentioned it is weekly, it is coaching, and his debrief, which is the video. He told us a lot of time to set triple alert and must monitor this stock. And when trigger alert, really just follow, set up and just buy in. Really thankful to have joined Asia Chart and learn from CK. This is exactly what I show you with Singtel, with DBS. We repeat and repeat, and we also post one. If you don't get it, then there's nothing much I can do already. Okay. Let's fast forward. This is Sentan 2016. Although I attended other courses where CK is the only one that provides such good support after course. The only one. Again, this person attended many courses, otherwise he cannot compare. Kudos to his dedication all this year. This is referred to the support, the video which I do every week. Got hired as a trader with the profit. Whatever I teach you got commercial value, no. This person got hired as a trader, no. Really thankful. And these are the messages, these are the words that inspire me to help my student more. Fast forward now. This is Jimmy Yap. I won first Money My Channel initiation. All right, stock challenge. Thanks CK course. And this is my student. This is a grab from TV, cannot blah one there. All right, these are the judges there, and these are the hosts, right? This one, the host. And this one, is a fund manager, isn't it? Likewise for this is Smart Investor CEO, right? Isn't it? Yeah, these two are the hosts. All right, this one also. All right, this is my student, and I'm very happy. If you take a look, thanks CK, I'm wondering whether I could meet up. He actually wrote to my staff. You don't have my email. He insists on to meet me, insists on buying me lunch. So he brought me to the hotel and the new hotel, and bought me lunch there. Nobody say best than the recent batch of students. His name is Yao Te. Must attend course, even you have to borrow money from a loan shark to attend. According to Mr. This is non-negotiable. This one must attend one. If you don't attend, it is at your peril. All right. And this person said, you must attend one. Now, this person just said this to emphasize that's all. He's quite rich. Give me the white pay for both. Now, all these students has in the past made a simple decision. They decided to be the 5% that are successful. They decided to be the 5% that do not gamble. They decided to be the 5% that win. In order to win the race, you have to start the race, but you don't have to be great to start, but you need to start to be great. And all you need to do today is to decide that you want to be successful. Now, a lot of people have not decided. They're not too sure whether being a successful investor is something for them. They have not decided. That's a funny thing. You have to decide. All right. Because if you're participating in the market, you have to decide you must be the better one. You must decide. Once you decide, you notice your mind become very clear and it's very calm. And you experience the inner stillness. Everything seems to align to support you. Now remember, this is your investment, 2,398. But for today, you don't need to pay this because I have good news for you. For today, I'm proud to inform you that after 2 years of to and fro with IBF, it has been approved and endorsed by IBF. You got sponsored by IBF. Now, this is IBF, Institute of Banking and Finance, which is a division under Monetary Authority of Singapore. You got funding. Singapore citizens and PR below age of 40, 50%. You pay half price only. So you only pay 1,298. Half price plus GST. Yes or no? Now, last year, student had to pay 2,004, no. Okay, those people I just mentioned just now, they all pay full price, no. Now, if you're above 40, you have small, 70% subsidies, you only pay 858 including GST. Good or great? All designed to help you. It doesn't stop there. The good news go further. If you still got skill future not used, all right, let's say you got 1,000 not used, you can use the 1,000 to actually pay for this. You only pay 298. I can tell you, this is peanuts. Huh? And if you are above age of 40, you use the 1,000 to pay, you pay 0 cent. Good or great? All designed to help you. So what you need to do now is just scan this QR code to register. Now remember, you don't need to pay. No, if you have not used your skill future, even you have used your skill future, the amount you pay is a lot less compared to previous batches of students who pay full price. Okay. Now the Cybercore has also posted a link. All right, this link. Use this link if you're on a computer, most convenient. So just fill in the detail. There's only one day to select. Fill in the name, emails, all right, IC number, because this is government money. Government need to verify your date of birth so they can verify your age to know the level of subsidies given to you. Is it okay? All right. Now, if there's any question, post into that chat. Now, once you finish everything, all right, assuming you're age 40 and above, click skill future, you're paying it, and then click submit. That's all. Okay. And there is an auto-generated, okay, email from Cybercodes. We'll send you a PDF copy of the registrations. Now, PR above 40 is 50%. All right, it's Singapore below 40 and PR 50%. Okay, Singapore above 40, 70%. Clear? So Mr. Neo, right? Yes. So remember, Singapore below 40 and PR is 50%. So you pay half price plus the GST. So this is not something that's going to be there all the time. All right, remember it took me a long while to get it approved. And they want to make sure it's very stringent that I cover certain fundamental. All right. So this is to make sure you have got good grounding. So Mr. Nia, I hope you understand what I just explained. Alert student to buy, sell. No, we cannot do that. But you will know the answer. That is important thing. Okay, I cannot send. That's illegal. No. Well, I hope you understand. This is government. Okay, we don't generate tips and sell. We will teach you how to get the tips. Very important. But having said this, remember, as a course participant, you have access to my forum. You go to my website, you enter, you log in. All right, you will have access to all the video which I did, and you learn. Now, let me just show you. Because I have not got a chance. Let's say, for example, chit-chat. Take a look, chit-chat. I just did a posting. This is Lion OCBC Hang Seng ETF. I told the student, okay, the stock broke out. Okay, it's non-sustaining one. So you are looking for setup. You will know how to find the setup. This is very important. This is a long-term reversal. Okay, so I thought about Chinese property stocks. I told them this. Okay, take a look. Many of the stock trade at extension bars and it is non-sustaining, likely to pull back. Take a look. These are Chinese property stock listed in Hong Kong. Shimang, all this we will pull back on. Long for same thing. Yanlock, the same thing. Let me just show you. So these are the thing right now which you can actually study. All right, and I will guide you. See this? All right, start to pull back today already. Okay, now you will know how to find the answer. That's important. Now remember, the whole idea is this. I'm sure you agree with me, huh? It's better to actually what? Learn how to fish. Is it correct? Than to have a fish, right? It's better to learn how to fish than to have a fish, right? Is it correct? But remember, you have access to the video, no? You have access to what I'm discussing. Okay? And student can ask question. Student can ask question. Okay, in fact, it was actually asked by a student. Let me just show you. Student asked about this, so I decided to post. All right, this is Singapore against ringgit. So I told them, there's this channel, and then I told them, this is the best time for you to buy ringgit. Buy ringgit. Now take a look. What is now required is the catalyst to trigger the move. Intervention by Bank Negara, clear. Interest rate cut by Federal Reserve will strengthen the ringgit. No, I told them, so this is the best time. If you don't, you see, it's strengthened against Sing dollar. No, right now the exchange rate is only like this, 325. No, before that 350. No, all right. So do you think you can benefit? So these are asked by students. No, this is nothing to do with stock. These are forex. No, it's okay. I still share one. You see, 10-year treasury, I still share one. Nvidia, I still share one. Okay. So this is to help the student. Now, because you have access to all these things, right? This is what we do. We teach you how to fish, but we also give you the fish. Clear enough? We give you the fish. This is something which a lot of people find very intriguing. No, I like to actually show you so you got confident. Okay, let me just show you this now. 28 March. Take a look at this posting. Best world. Breakout. This is called rabbit and a hat setup. You will know the price one. Breakout. And then this is what happened. Okay, it move up. So there is a gap here some more, which I taught you just now. Let me just show you. Now, because a lot of people have no confidence, this is the one. Can you see that? This is best world. Breakout. Gap up. And then going to be taken private. No. This is a run. No. All right. And we discussed this as in the video. But a lot of people dare not trade because this stock was suspended for 3 years. It doesn't matter. See the volume. Answer come later. Taken private. So you notice a lot of people always miss one. And not only this, as I mentioned already, all right, you can use any charting software. You can see the trigger here. Okay, you can see the trigger here. When the next round, the holiday during 27. Oh, I do not know. After this is next year already. You'll be next year already. All right. So I'm not too sure whether you have confirmed your holidays. You still can go for a holiday, maybe make some adjustment. Because you know why next year? I only worry next year no more subsidies. No more what do you call that? By the IBF. Oh, this thing may happen. We do not know. So if you can, it'll be good to actually join at this moment. And this is something I have never imagined happen, man. Seriously. When I first started out, I got to pay everything myself. Now government is making you a better investor. No, this is something I myself personally very surprised. No, because this has nothing to do with skill enhancement. You don't require in your job, right? Isn't it? This is investing. No, all right. And this is not just skill future. This is IBF plus skill future. No, okay. So let me just quickly run through this. So if you pay 858, you just pay everything. So remember, you pay 858 and you have 1,000 skill future credit, so you pay 0. Now, assuming you are PR, all right, like what Neo was asking, Singaporean below 40 and PR, all right, so you pay 1,298. So 1,298. And then if you have skill future 1,000, so your balance 298. Balance 298. Oh, okay, can hear me well. Okay, 298. Okay, so what happened was that after you submit, right? After you submit, you come back to this link again, the link where you register, but don't need to fill the detail. Don't need. Just come here and use any of this option here. Credit card, pay now, PayNow to pay the balance 298. Is it okay? That's all. All right. Now the rest, Cybercode will contact you. I'll make it very simple. And the cost materials nearer the date, nearer the cost there, will courier to you. It is a hard copy, colored one. Very good quality paper in an arch file. It'll be couriered to you. Is it okay? Now, beside Mr. Neo, anybody else has any questions? You can post in that chat. Anybody? Okay, so let me just share with you. Singtel, DBS. Take a look. This is Singtel. All right. Correction. DBS. See the correction? UOB. See the correction? Now, how do you know to sell here? Especially for DBS, which have no resistance. Now, because of this, let me just show you. So this one, once you actually know, you are actually better prepared. Take a look. This is Singapore index, STI index. Okay. Now take a look. This is 2018. This is 201. When it actually approach like this, right, it will not break one. So when it reach that level, right, I know the blue chip will sell down one. So I take profit already. The video is actually we can't share because actually the IBFs use it as an audit, no. So yeah, we can't share. Not that we don't want, it's for auditing purpose. So this is something beyond us. Because remember, this is government money. So there are certain requirements. Oh. So these videos, there is a video recording, but it's actually meant for auditing purpose. Okay. So that is the reason why you must know how to take profit. If not, then you're wondering how. And I want to be very frank with you. It may fail, no? It may fail one. Right? It may fail. Now, what is today's date? What's today's date? 3rd October. Today's 3rd October 406, about 55 minutes before the market close. Currently, market trade on the range bar with very low volume. This sign of weakness. Now, over here, we have a very strong rally and it tests the previous high made in 2018. As mentioned in previous video, it's not likely to break on first attempt. And we are likely to see pullback. And this is what we have been experiencing. However, the last few bars itself does indicate sign of weakness. This is actually a weak bounce. Unless there's a change in this behaviors, otherwise we may see a test of this pivot low here, which is at 3559. Now this is actually a weak support, failing which we are likely to test the 3500. So some of the big cap stocks that have been trading, particularly the bank and Singtel, SGX, also has a similar behavior. So it's important for us to recognize that and stand aside until directions become clear. The blue chip may even go down further, particularly UOB, you know. So this is actually, if you don't take profit, you're not really worried already. So this is something we want to avoid. All right, we want to avoid. So this is something which I help the students to appreciate and understand. Okay. Okay, anybody else has any other questions besides Mr. Neil? All right, because I still see a list of people in the room. So if any burning questions, you want to get out of your chest. Now, some of the participants may feel that actually, you know, maybe I have difficulty understanding because of my age, that kind of thing. I want to actually just share with you. I got this particular student, his name is Fiona Low. Fiona is 70 years old. Anybody here 70 years old? All right, this is Fiona, and he actually wrote me an email. Good evening, CK, Happy New Year. And he do that every year. And he was an older student, and every year he bring cake to my office. Now, many thanks for the heads up on GSS. Okay, I read your posting this morning and put it blah, blah, blah in my alert. And happily I went in to buy and break out. Because of a high volume and long extension bar, I decided to sell the close at 118. You know, take a look. Decided to close at 118. Now here, good start. All right, sleep well. I can sleep better, and then you have good start to the year. Now, this is 2020, COVID year. Anybody got good start to the year? Now, in case you're wondering, this is a 70-year-old lady and uses our language. Take a look at the stock. This is where we buy. Now, I did a posting here. I said, likely to break, he enter, he get out here. If you don't get out, gone. This is a 70-year-old lady, no. All right. And this is what he wrote before, no, in 2017. Knowing you and Asia is a real blessing. And I feel very touched by this gesture. Okay. So this is something, all right, the student actually, who are already that age, but no problem. And I also take a look at what some of the students has actually mentioned. This is more recent one. This is 2021 timekeeping up. Simple to understand, even if you don't have knowledge. Even if you don't have knowledge. Even if you don't have knowledge. And in fact, I want to actually show you a most recent one. A most recent one. And this is September 30th, 2024. You tell me, when is this? We just finished the last workshop, September. And this is from Mr. Lim. If you're looking for true TA course, all right, to better your trading, this MES course, you should not miss it. If you want to better, this is the true. You notice he used the word true. Why a person use the word true? You mean there are a lot of bluff one. True TA course, no. All right. Now remember, I'm not just teaching you the TA course, I'm teaching you trading system. That is important. Trading system. Is it okay? All right. Now, in fact, there's a participant, quite recent participant. He said this. This is Mr. Wu. This is not found in many seminars and webinars I've attended. The trainer has given new meaning and insight to the things we have learned in the past, which may not be correct. You think about it. Is that serious? So can you understand why there are people who suddenly realize that there are a lot of things which they have learned, perhaps not necessary. Now, anybody who knew, right, started out is like this, just like myself. Read a lot, and then what happens when you drop all those things that are not necessary? You trade light. You understand? Light. So you notice, just like I show you the chart, right? It's like that only, no. There's no funny indicators, exhaustive name indicator. Don't have. The most is moving average. Okay? Okay. Anybody else? Any questions you want to ask me? And you're still not too sure? It's like Conrad Chiu, quite recent one. Wish I attend this 10 years earlier and to start my investing trading journey with CK. Okay, very good, Neo. This is what I will do. Take note, this is Andy numbers. Okay, this number, there's 3 options. You don't have to bother, you just press option 1. You will go straight to Andy Tan handphone. Okay, take note of this number. Now remember, press option 1. Email, that is his email. He has another colleague, all right, Justin. So since Andy is here today, you talk to him is most ideal. So that's the number and that is the option. You may want to take a photo of this.
CK, there's a question posed by Neil at this Q&A.
Give me a minute.
Yeah.
U&A. Oh no, that one is repeated. Repeated. Yeah, repeated.
Is it answer already?
Yeah. It's repeated.
Answer. Okay.
Yeah. Okay. So this is what many of the past participants actually feel about. And remember, just I showed you the one just last weekend only, just last weekend. Now remember, this is not going to be available all the time, no, because ultimately the funding will drop and things like that. Okay, and because you think about it, the government pay you a few $1,000s to learn how to invest. Think about it. It's not talking about upgrading your whatever career and things like that. It's not. It's just making you a better investor. Okay. Now remember, sir, usually people try new things. They always have this fear, right? Huh? Is it fear, failure, fear that you make a mistake? You know, you park yourself with few $1,000s, and then you feel you actually made a mistake. All right. But the greatest fear is actually fear of regret. Oh, isn't it? Yeah. And right now, you think about it. The fear of making the wrong decision, the fear of spending few $1,000s. This fear is even taken over by who already? By the government, no. Will take over your fear, right? The government give you the opportunity to attend this for free, no, because they pay for it, no. I mean, certainly, I don't see there's another government somewhere in the world that actually does this. Really, I can't think of any. Okay? So you have no more fear. The fear is taken over already. So the most difficult thing actually people find is getting started. And because of all these things. But all this consideration is no longer there. Okay, it's no longer there. Let me just share with you this thing here. It took me a while to actually come to that. You can hear me because I noticed that there's a message to say that my earpiece is changed. I don't know why. Take a look at this thing here. You can hear me, right? Now, this is by Michael Cowell. Track the study of this 8,000 stock, 8,000 big cap stock. Okay, which cover majority of the stocks. You forget about the Russell in US market. This is percentage collective return, and this is the number of stock. 8,000 stock they track over 20 years period. Collective return, the bottom 75%, total return zero, no. Total return zero, no. The top 25% capture all the gain. So you notice most of the stock underwater, no. Only the top 25%. So does it make sense that you must know how to find? And that's just how I show you the list of US stocks, right? Year to date, until September. You notice, there's only one tech stock, no. And people are still talking about tech stock, no. They miss out all the other stock, no. Just like I show you the list in Singapore, same thing. I show you the list also in Hong Kong, it's the same thing. Most people only know that certain stock, but they don't know that other stock they are performing much better and perhaps much easier to handle. They're still looking at all those stocks that already failed, like Tesla. Right? So this is something uncalled for. Now, I'd like to actually show you this as well because this is extremely important. And when I read it at the time, I was surprised myself. This is Mark Douglas. This is synonymous to trading psychology. He's an expert. Now, he wrote these two books. From his book, he actually mentioned The Largest Group of Consistent Loser. It's composed primarily of doctor, lawyer, engineer, scientist, CEO, wealthy, retired entrepreneur. Now, you may belong to this category. Doctors, lawyers, engineers, scientists, CEO, wealthy, retired. The largest group of consistent loser. I paraphrase this. The largest group of consistent loser is composed primarily of the very intelligent people in our society. And who are these people? Consistent loser. Is that serious? When I actually learned about this, I said, my God, these are very clever people and they're the consistent loser. Something must be missing, right? Isn't it? So that actually caused me to sit up. No, I don't think I got a master degree, Lawa, no. IQ higher. Doesn't matter. You're still contributing to the market. So unless you're humble enough to actually acknowledge the market has its own language, we better go and find out. Because if you're serious about in the market, right, the sooner you find out, it's better, no? Rather than keep on contributing to the market. But for some reason, as I mentioned already, the bottom 50% are not interested one. They are gambler one. They only look for tips only. The next 40% are still struggling. They perhaps attended workshop before. They have a training system, but they are not aligned. And you don't understand why they don't align. They have not overcome that fear. All right. So they cannot align. If you cannot align, then you have a problem. And they just continue to struggle. And this 40%, which I mentioned, can be there for many, many years. And one fine day when they realize, they're wondering why they did not realize earlier. So this is the experience with my student. They all regretted. Right. So anyway, we will just hang on the meeting for another maybe 5 minutes or so. Now it's about 9:25. So 9:30, we'll probably close. Anybody here has a burning question you want to get it off your chest? Or anything you want to ask me? Now, I also want to actually share with you a particular student. This student happens to go for SPH. Okay. And at that time, I have advertisement in the paper, so I got this student to help me. So because of this, I can WhatsApp him quite frequently. So his name is actually Jay, which I brought. And that was in 2017. Hi Jay, heard about the job card at SPH, hope everything is well with you. So at that time, there was retrenchment exercise, SPH. Thanks, CK, for your concern. I'm good for now. I know I can always trade for living. Thanks for coaching me. I can always trade for living. No, take a look. Great to hear that. Take care. Thank you. You have taught me well. I have a tools to keep me alive. Notice he used very strong words. This the real value, no. And I'm very happy for this student. Because subsequently, there's further restructuring. I didn't contact him. All right. He was transferred to digital marketing. But he said, no problem. I'm okay. And I'm very happy for him. Right? You know what to do. So do yourself the service. And this is the best time, as I mentioned, because you pay very little, or for some, don't need to pay. All right. Any more last questions before we close the meeting? All right. If there's no further questions, we'll close the meeting. Thank you for participating, and we look forward to seeing you soon in our coming workshop.
Hey guys! Today we're going to learn how to add this scrolling animation to your website in you.